Okay, yeah, so it sounds good over there. All right. Peace, power, profit. What's going on, family? Ori in the building. Oba Marquise, brother Divine in the building. Oba Martell in the building. Brother Matt's in the house, right? And we have our family Ramsey Farrow in the building. Peace, power, profit to you all, right? Oh, let me make Ori definitely moderate because he definitely family. All right. So yeah, again, just jumping on kind of impromptu here to discuss a little bit of what I had been seeing. Of course, I type whenever I can. I try to stay, I guess fluid as possible when I can on social medias when I'm able to. Of course, then there's moments when I'm not, and that's fine because again, you guys are pretty much, able to handle your business. All right, I know everybody's at different stages of, within their trading career or their journey, and in moments like this, you gain a lot of experience, right? As we say, sometimes the best trade is the one not taken, right? When you get some natural observation and when you get to watch the markets, in real time and see exactly what's going on, and kind of plan out a thesis inside your head and see if the market's going to honor or respect that, right? So that's the great part about that I love about this stuff, because you don't have to put so much risk out there to prove a point, right? Especially to no one, right? Because there's no, this is not a congeniality contest, right? Who looked the best, right? On paper or in live accounts. That doesn't work that way because it's an individual mandate here, right? So, it's, you just have to show up and perform basically, right? It's a performance-based industry if you are specifically of the trader mentality. Now, of course, the long-term investor, they're not concerned about the day-to-day, rigmarole. Now they have moments where they say, well, today may be a good moment to add to a position or, lessen their position if they may be overly leveraged in margin. However, but for the most part, they're not sitting there trying to dodge, the dodgeball throughout the day, right? For day traders, right? Especially in the volatile marketplace, because we've been waiting for this day, right? We've been waiting for this day. We've been saving that bacon, right? All right, my man, Will Smith, I Am Legend. I was saving that bacon. Right, we were saving the moment to get to a volatile market where we have these large, expansive and expansion value type pivots, right, in the market, right? A lot of volatility causes market to kind of open up, and in doing so, a lot of the premium buyers, of course, who's buying puts outright or calls outright on the bounces, if you willing to kind of play that daredevil game, obviously with some level of discipline and due diligence, then yeah, you could be rewarded quite nicely. I mean, again, we've talking about, turning, $100 or a couple $100 into $500-600, in one day, right? In one day, right, per contract, right? In some cases. So, that's the greatness of trading volatility, right? But also being respective to the trend that that you have in front of you, right? Because if not, if you try to counter trend trade, a lot of that, it could be, very problematic, right? Very problematic. All right. So yeah, so begin, outside of my rocky opening, when I was all over the place, just closing screens, hitting screens, sharing screens, I had too many of the my Google Chrome tabs open. I should have just had all of them on one like I typically do, but I was doing some research, falls in the little sound system, whatever. And I forgot I had some stuff spread all over the place. So I went to go live on YouTube through Zoom. It sent me to one of those screens that I initially wasn't using. Not the main screen, I should say. So I'm searching for man, what this thing is at? All right. And so whatever. But long story short, we're in the building, right? So peace, power, profit, everybody. Again, so as you see again with the SP 500 here on the weekly, given the fact that we're still somewhat in this downtrend, even though it doesn't feel like it when you have these mad, wicked bounces that come throughout the middle of the day, it only kind of brings more of the, that complacency gets checked, so to speak, right? Where you can't just sit in positions, day to day if you don't have necessarily day trades, unless you really like a long-term trend perspective to play out, with the wicked bounces, coming down and rallying back up and maybe pulling back a little bit and rallying higher, then coming back down like that. That's the market doing volatility, right? And when those moments are happening, it's incumbent of you to understand the importance of being able to chart markets thoroughly, right? Because again, you're still playing support resistance points regardless. It may not seem like it if the market is one-sided to you throughout the day, but those moments still have, they still carry weight, right? They still have merit, right? And for what it's worth, if you're able to, man, look at Moderna coming down. Ooh, man, Moderna getting that work right now. Yeah, I still got some puts in Moderna. Right while I'm speaking, I'm sitting there looking at, because it's still active day trading time of the day. So y'all gonna have to forgive me. Sometime I might just go to talking, then have to go silent for a hot second. I'll be checking my little bank account, right? Checking my position, so to speak. But yeah, Moderna is still getting ticket to the woodshed. I posted an article on that, I think yesterday and today, about, matter of fact, today, that was my main talking point that I spoke about today when I posted, throughout some of the Facebook message chats and a couple other message boards, that, I had my mind set on Moderna, right? Well, again, they got the little news today. Well, it came out yesterday, last night in the evening, but Sweden, right? Of course, in Denmark, they had to pull the Moderna vaccine due to the fact that, there were some side effects that, as if we didn't know that already with a lot of these vaccines, but there were some notable side effects that affected some of their recipients of the vaccine. So they scrapped it for the moment, right? They just pulled it all together, the Moderna vaccine. And Moderna had already kind of been under pressure because of the Merck pill, right? The morning after COVID pill, right? The morning after COVID pill, right? On top of the fact that, again, yeah, it has a very high PE ratio. It had been, somewhat overbought, but it was still being, accounted for the idea that it has substantial growth locked into it in a way where, regardless of the fact that the stock may be a little expensive, it's still worth noting a notable investment, right? For people who want to take starter positions and maybe kind of dollar cost average in, right? But we know that the bounces are, they're still subjected to the air pockets in the market, right? When we say the air pockets, we're talking about gaps that, that needs to get filled. And if you keep having all this kind of bad press that keeps hitting your stock, which in this case, Moderna that had maybe, I don't know, maybe 4 or 5 different headlines over the past 2-3 months, or I would say at least last month and a half. Let's shorten it down a little bit. That were somewhat, keen to the fact that, maybe it's time for Moderna to cool off just a little bit. I spoke about that during that Merck show that I did just recently on YouTube. If you haven't, watched that, it's long, but you might can skip through certain parts and find the stuff that we talk about as far as Merck being a new catalyst in the COVID world that may cause a little friction for the vaccine stocks, right? It's obvious, right? You got a pill that could do somewhat what, people are thinking, whether it's, they think that or not, they're making go around the vaccine in itself, right? But they know, ultimately in the day, the need to kind of, continue to update people as far as their shots and this, that, and the third, be it the booster scenario or people just haven't got theirs all together. Well, those vaccine players are still going to be, very much in play regardless. But for the most part, it doesn't leave them as the only, scenario out there that people have to defend, the COVID scenario with, right? So nonetheless, the stock is pulling back, right? As you can see there clearly. And so when I was talking about false air pockets, right, we have an air pocket sitting down here, right? Matter of fact, let me pull this over here. Where is that? There we go, right there. All right, we got an air pocket sitting in yeah, just put it right there. All right. We got an air pocket sitting in Moderna's at around this point right here, right? You can see it right there, clear as day, right? Clear as day right there, right? And so, markets have a tendency to fill gaps, right? They're always searching to fill gaps. Now, some would say, well, yeah, it doesn't seem to work that way for the SP 500 apparently, because SP 500 got a lot of gaps in it that have yet to still get closed, right? You can see got a tiny one over here around 401, right? Everybody waiting on the 401 gap, right? We closed a lot of those gaps from 383 and many others up here along this area. Oh, you guys can't see. I forgot. I only got the share screen on one screen. See, that's why I know I should have been on StreamYard. Exactly why. All right, so let me do this here. All right, let me just do a portion of the screen. All right, I think that'd be easier. Yeah, so let's do it this way. All right, there we go. That's better. All right. So like I was saying, here's the one for SP 500 sits around about 401. So everybody's waiting on that one. All right, let me just put it out there. A lot of people waiting on the 401 gap to fill. Again, we close a lot of those gaps up in around those areas here, the 403s, whatever. And it's a couple other ones that we can maybe watch inside of here that are a little bit tighter. You don't necessarily see it on the weekly chart, but they're there, right? They're there. And so, of course, using the daily chart, I should be using TradingView in this moment, but just kind of showing you where we at, right? We kind of pivoting off that 430, trying to hold 430 after breaking below it several times here, here, yeah, about 5-6 times where we kind of penetrated underneath 430. But it's obvious at this point, what they're trying to do, they're trying to protect that 430 at this point, right? As a support point, obviously. Because today, we was definitely going to, not only flush down a little bit lower and maybe potentially, bounce off this 423 gap scenario. But they stopped that. Again, that's the most closest and current gap fill that we're looking to try to hit. Now, even though we kind of hit it here on a pullback, but it's still considered the air pocket where you can say, well, if they're going to bring it down to the next level of a hard support, it's going to hit that area first, right? Because again, there lies it became resistance at a point before it broke out from there. And the traders that sat in at that point here too, they're probably still sitting down there holding their positions there, right? So it might hit that area and pivot, right? But nonetheless, that's about 10 points away at this point since the market kind of reversed and kind of bounced off that, intraday support point, roughly around about that, 428. It was like 428, 15, 20, 30 area, somewhere around there. Somewhere around there, give or take. I think I posted it. I did post it in the group exactly some pivot points to watch for in the case the market reversed. And sure enough, it reversed off those pivot points and, haven't looked back. And here it is, the SP 500 is fighting until the close to somewhat try to, at least close over yesterday's closing price was around about 433. What was it, like 432.84, somewhere around there? Let me see. No, it was like, excuse me, 433.10. It's 433.10. Right. So as you see right there, the market is doing what? Building the support at that point, right? All right. Let me get my little marker up here. So you can see what I'm talking about here. All right. So of course that rounded bottom, right? We know about those rounded bottoms, right? Rounded bottom support start to build. That becomes your new pseudo support, or a launching pad to send the market potentially higher. Right. So as of now, it's just playing off yesterday's closing price as the new support. Again, we got some, some reputable data getting ready to come out in terms of non-farm payroll and jobless claims, which will either add more pressure to the feds or whatever. But for the most part, again, you see right here, that support point around that point there where the market just kind of held and bounced off that area like almost like a triple bottom after having basically a same at the top here, right? It hit the market up here like 4 times. It bounced off the resistance and couldn't break. And so, it pulled back, found the support here, ping here, ping here, pinged here, and did not break lower. So when I saw that, that it was just holding at that almost like a straight line there, I said, you know what? Let me go and exit the last little puts I had. I already kind of closed off a couple of them, early on this first flush down here. I sold, I think maybe right around that point, then when they kind of reverse back up, because when you see a big drop down like that, rarely do you get a chance to time the exact bottom. Right, you got to play for the first bounce and hope it kind of rolls back over. In a dead cat bounce situation, it did not. It bounced, came back, stabilized right at that point there, and then another big green candle started to emerge. I just closed that last little puts I had out right there, took the profit and moved on. Right, and so all through this here, it was just trying to chopping, right. And I had one left in my Robin account. I closed my taste where I had one left, and I was trying to save it. I was saving it, right, hoping the market would kind of roll over here at this point and kind of come back down to the downside. It did not. So, once it again started to bounce back up toward the VWAP here, I sold the last one that I had in my Robinhood separate of the taste work at around that, that VWAP line here, right? So, and that was still for a little profit. It wasn't much as it was worth when it flushed down this low, right? Of course. But that was a standalone put. I only had like one. that was sitting over there, amongst some, other position I had as far as my Moderna puts. And then I also had Moderna put in my Tastework account. And so right now the Moderna play is obviously paying. So again, no complaints, right? Both of those puts that I have that I bought the other day, above 335 and change, I believe, they're paying quite well right now, especially with that news that came out for us, the Moderna vaccine, right? So, hey, that's the market, right? As they say, that's the market, right? We live for it. We understand, the greatness of this stuff, because any given day could be a nice little holiday, right? Any given day, if you're in the right place at the right time. All right. So, just kind of filling out, what's to look forward to going forward until Friday. Of course, you got Levi. Levi's has earnings tonight. All right. So down here, they got an earnings play, around the retail sector to kind of give you a little bit more insight that we got from Nike, not necessarily in the same brand, but they are retail stores that have a lot of issues with supply chains, whether they do or they don't, whether they was able to evade that by having, a lot of stock in-house, which negated them having what they call short-term supply chain issues with their product. But as of now, the consensus is that Levi's is supposed to have a strong earnings tonight, right? This based upon, their previous earnings guidance, the sales that they've been able to accumulate thus far. But again, there is a silver lining. Again, you cannot overlook those supply chain issues at this point, right? They may have to re-update their guidance to reflect that, because I don't know if you guys saw or not, but in the commodities market, the price of cotton skyrocketed, right? I think the price of cotton is up over 33%, somewhere around there. So yeah, unless they're making, Levi jeans with plastic or some trash bags, yeah, they're gonna have to, carry that cost, right? Or pass it off to the consumer, right? That's a big commodity inflationary cost now that they now have to contend with, right? So again, for what it's worth, you have to make sure that you're privy to those kind of data points. If you are trading a lot of these different stocks that may be affected through their raw material usage, right? Or the raw material costs, cost analysis, cost basis, when those things are, actually go into factoring whether or not a company, may have issues, right? Or surrounding their, their earnings report, right? So just putting that out there, right? All right, just putting that out there. All right, what's going on, fellow American African? You said, what's a good time from 4 options, 2 weeks, 30 days? It depends, right? It depends, right? Because a lot of that goes into, not just, if they're in a specific catalyst that may be surrounding that company at that moment that they, have coming out, like they got a press release or something, FDA study or something to that nature, or, maybe a government contract or this, that, and the third. Sometimes that's a great factor to put in the, into the mainframe when you're trying to figure out what's a good time frame to play options. All right. Again, time to the market when there's a lot of volatility. If you don't want to get churned up in a lot of the kind of up and down, you might want to extend that contract out a little bit further if you still like a directional bias in a stock to kind of go the way that you think it's going to go. But for the short term, it may kind of be up and down, fighting a lot of the, the broader market sentiment. And so you want to give it some time. Of course, if you're just trading a SPY, of course, that's something that has 3 expiring contracts out of a week, right? You get to try to trade on the Monday, you get the chance to close it out on the Wednesday, and particularly one on Friday, right? So that's a whole different ballgame, when you trade in the SPY, of course. But these individual stocks, of course, yeah, you have to be very cognizant of the fact that you're trying to give the stock room to breathe, right, or expand, so to speak, right? Because that becomes important, right? That becomes very important, and not having to fight off the theta decay, right? To say time kind of going against you, if the stock can't necessarily get the natural traction that it needs to move, right? So the rule of thumb is, of course, if you're trading any kind of potential press release that's yet to come out, right, and you already had some critical points of support on the stock, depends on where the stock is at, because that also matters too, far as technicals. But if you definitely clearly down near some, some notable support points, then yeah, you want to give that stock at least a couple weeks, right? 2 weeks minimum to about, to a month, if you're playing somewhere in the middle of a channel of a stock where it's kind of sitting right in that midline, the gun line, I like to call it, right? Neither breaking out or breaking down, then yeah, you got to be a bit more cautious in terms of the time you want to put on that, unless you just don't want to have to deal with your delta, diminishing. Yeah, then yeah, you can still kind of play a little bit further out. But if you're playing close to a particular, again, a catalyst to come out about the stock, then yeah, you still want to give it, maybe short term, just kind of see if it can, prove itself to you. Though you have to kind of spend a whole lot of premium if you don't have to. It means spend a lot of money to get into the contract, right? But if not, if the contract seems to be pretty, reasonable for price, then yeah, go ahead and extend it for 2 weeks, right? Go ahead and put a 2-week handle on it. At least that way, you can rest assured that maybe your delta will kind of help keep you, comfortable to a degree, unless the stock does anything crazy, right? Pull back or go up, depends on which way you trade it. Then you'll have a little bit of time to allow that intrinsic value to build up, right? Because intrinsic value is basically, surrounded around the IV and that of the, the contracts that are coming in from the daily buyers. And then ultimately, it's, relegated to the idea of what the open interest looks like, because it's building a pot, so to speak, right? Like if you play biz with, it's like you're building a kitty up, right? Where you get that big pot is beginning to build up. That means it's more premium now for to be locked into the stock, therefore increasing the volatility or the IV of it, right? And in some cases, it will make the stock more expensive, right? The options, that is the option contract, more expensive, right? So yeah, it's a lot of little things that go into options. Of course, I'll be here for days, right? But just want to put it out there a little bit. If that helps you out a little bit, brother African and American, excuse me. All right. So you said I used to buy a ton of those Levi's 501s. Yeah, they hot, right? And they brought them back now. So again, of late, Levi's been doing pretty good. I mean, look at the daily here, even though it's kind of pulled back lately because the broader market got, thumped, right? And that was today, of course. This daily chart here, right? That was today, right? So it dumped basically from $25 down to where it's at right now, and just kind of battling, to gain some kind of level of support going into its earnings report tonight. Who knows what it will be, but for the most part, it was just stuck inside this little trend right here, bouncing around inside this trend here for 24, back up towards 26 pivot, right? So you had a $2, $2 window, right? Plus minus scenario. Of course, we do a lot of plus minus ratio here. You split it down the middle, right? You split at the end down the middle, which is roughly around 25, right? You got a point to the upside and a point to the downside. Like I was just talking about, false that, brother American African asking, do you want to buy 2 weeks out or 30 days? Of course, it depends on where you're at in that channel. If you down here at the bottom of the channel here, right, and you're playing for upside because you think the stock is kind of bottomed out, the RSI might be a little bit oversold, and they particularly may have news coming up. Right. And it's not necessarily having to deal with a lot of the broader market issues as a whole, because the SPY comes down, that brings a lot of the other stocks down too. Right. But the one thing that we know that's hurting a lot of retail stocks, granted, is what? Inflation. Right. That's the only thing that really got, retail stocks under the gun right now, because the inflation price, which costs, these companies higher prices for the commodities that need, the material basically, to manufacture their products. Right. And so either they're going to have to pass that cost off to you, the consumer, or they're going to have to eat it and then hope they can make it up on the back end. But nonetheless, those inflationary pressures still do what? Provide a somewhat of a as a deterrent to a lot of the retail traders who are liking, retail stocks, quote unquote, for the fact that, the cost of those goods are going up. Like I said, just recently, the cost of cotton has gone up substantially because of, inflation. Right. Again, that's shirts, pants, socks, shoes. In some cases, not leather, but a lot of things that that the world depends on from cotton manufacturing. Well, guess what? They're gonna have to pay that extra cost to be the boss, right? Right. What's going on, Ilba Angie? I see you in the building. Peace, bound, profit to you, right? Hope you're having a great day, right? So yeah, that's just something to think about. Of course, that so going into earnings, yeah, I do see Levi's here bounce off that $24 support. So guess what? It's showing you right there. It pinged here, pinged here. You got close here, but it definitely blew through it a little bit here. As now, $24 seems to be a support for Levi's. So if anybody was going to trade that in the earnings, yeah, they may do like, okay, I'll trade. Yeah, if I'm going to, feel lucky to try to play a call in the earnings on Levi's, and guess what? They would have wanted to try to buy that close to that 24 and not up here near 25. Why? Because it showed you that there was a point of support after it hit it twice over here, tested it earlier today, came down to it, of course, and pivoted off of it, and then necessarily break through it at this point going to the close. So, of course, if it had closed below that, then that would have definitely made a person feel comfortable in buying puts, even though it still may, drop from up here where it's at. But, your risk management definitely puts you in more control if it's below some very key support points at that point. That means there's a lot of fear that the bulls now have to kind of contend with going into that report tonight. All right. But if not, it bounced. Yeah, they might try to, try a lotto call to see if nothing else, if it can bounce back towards that $25 point or, up maybe near 26. If was the fifth, we all be drunk scenario. If the report come out, that they are able to deal with the inflation of cotton prices rising, to be able to deal with the fact that supply chains may be a problem for us, they're getting, their shipments in, they got manufacturers overseas and whatnot, they're kind of, hurt by that or not, and still say, well, this might be a one-off event because of the supply chain issue, but yet we still feel like we may be good going into the holiday season. I'm pretty sure that's kind of stuff they will say. Then, yeah, investors may say, well, you know what, I'm not going to sell off here. I'm going to hold my stock at this point, and you won't necessarily get a big sell-off that most times you would normally get if it was really, a moment, where the market just like, nah, we ain't respecting, right? None of these earnings report, right? So it can go either way, right? I know I said a whole lot there, but, a lot of that comes with the politics and learn how to trade options, using options to trade earnings, right? Because I do a lot of that myself, right? Done pretty well at it, thus far in my career too, with trading options in the earnings. That used to be my little niche that people used to kind of come to me for, man, what you playing for in the earnings? I know you got something, right? But of late, I just kind of, I backed off a little bit. I still, study around those moments, but I just don't trade them as often. Why? Because there's been a lot of other stocks that I've been able to trade that has been more liquid in terms of profit. And that's like the SPY. I've been killing the SPY lately. I've been crushing the SPY, right? The SPY just been paying all kind of, and then that and AMC and a few others, I just been crushing them, right? So it necessarily wasn't no need for me to kind of chase a lot of the earning plays. With the exception, I trade a few of them here and there. We hit Nike up. We hit a few others up, just recently. But outside of that, it's no need for me to, go through all that. I just go trade the SPY, right? Because the SPY just ultra volatile late, and it pays well because it carries a really good delta a lot, because a lot of people are always buying the SPY, right? It has a decent IV throughout the day, throughout the week, essentially, because everybody loading up into it one way or the other. But nonetheless, that's just how I look at it, right? All right. So yeah, so let me see. Anybody got any questions? You guys got any questions too? Yeah, today is a good moment to kind of ask any questions you may have about the market, particular stocks. I can get the link here, guys, if y'all want to come on, right? I got about an hour or so to hang out, maybe an hour and a half. We can kick it. Like I said, I know I kind of opened up all over the place, screens all over the place. Like, man, what's going on over here? Right? But yeah, so let me get the link and post it just in case you guys want to come on. 1 second here. Man, I'm loving it. Come on, Moderna. Keep dropping. Look at Moderna. Since we've been talking, Moderna then dropped by 2 points for me, another 2 points, right? Man, that Moderna contract is paying right now, right? I'm loving it. They said McDonald's, I'm loving it. Yeah, I'm looking forward to break 300. I mean, that was my thesis earlier today. I mean, I can go show you why I had put down, I was saying, maybe we can get down in the low 300s today. If maybe if we real fortunate, we can break below 300. That was literally my talking points on Moderna, way up here, like up at the top points up here, right? And so far, so good. We down to 303, right? So far, so good. Now it'd be great if we can get to 280, right? I think a lot of people got a lot of contracts sitting at 280, right? Because I was checking the flow chart. I say a lot of people sitting at the 280 puts, right? So I wonder what that's all about. But then again, it makes sense because it's air pocket scenarios, right? They think about those air pockets, right? I think, matter of fact, it's either 260. We got one at 260, and I think 280 is just a hard line level of support, So right here, see, right around about 280. That's a hard line level of support with that line right here. And there's your air pocket down to 260. So 260 would be ideal, right? May not can get all that, before Friday expiration, but I think a lot of people are trying to trade for the idea that, if it can get down to 260, then they can hit the reset button, and then they'll feel comfortable buying it and not feel like they're having to pay an overpriced, value for it. Right. And actually sitting right at the VWAP, as you can see there on the daily, the VWAP sits at around about 260, 261. Clear as day. All right, as you say, clear as day. All right. So yeah, so as of now, that Moderna contract is rocking in my taste where I already know the one in my Robinhood probably is swollen because I bought that one a little earlier. I bought the one in Robinhood up around this point here, around that 330. It's like 3. It was up near 340 area. Yeah, I bought it a few days off that last press with the Merck news. All right. So yeah, we got that, and we also got, what else we have? We have CEI. We hit that one up. That was another one we hit that fell from grace, I guess you want to call it that, right? An oil play that was speculative. It had a dirty little short seller report that came out on it yesterday. It credited the stock 50%, basically in a matter of an hour and a half. The stock just plummeted, right, from like $3 or $4 all the way down to like $1.10, and then it bounced around to like $1.70, and then rolled back up. So as soon as it got to around about $1.67, $1.70, I bought some puts in it, right? The puts were like dirt cheap, right? The puts were like $20, right, for $1, strike price put for the October 15 strike, So I bought like 5 of them, right? I bought 5 of them. And guess what? All of them in the money right now. They definitely in the money right now, right? Because the stock definitely rolled over. Granted, the market was kind of already signaling, that oil stocks were starting to already kind of, get a little ahead of themselves. But either way, matter of fact, let me show you this here. Let me go to the minute chart. And let me take off all this, this scribble I have up here. Clear the drawing. Okay, yeah. See right here, we already broke $1. See, there we go. See. All right. I bought my puts in this. In this. Let me take this pencil off. All right. Let me back it out. All right. Back it out. Here we go. See right here. A short seller report caused this. A short seller report came out the other day and caused this cratering. Right. Let's back it out a little bit more so you can see. Right. This stock was sitting up here near $4 a share. Coming into the month of October, of course, based on the 4th, it tried to make a nice little gallant run, got up like 363. People thought it was going to break out. It kind of stalled out. And then it pulled back towards that $3 support and kind of held there, right, as a nice little launching pad. You see that tested to here, tested to here, tested to here. It was holding. And then all of a sudden they dropped the report almost like, midday. As you see, that's the middle of the day. Yesterday, and the stock just cratered, right, from $3 all the way down to like $1.01. It bounced back up to like $1.70, close to that. I bought my puts, like 5 of them, like right around this point here, around about 330, right? Literally around about 330, I bought like 5 of them for the $1 strike price for the October 15th expiration, right? And for $1, and look where it's at now. Stock is at 91 cents. So it broke below $1, right? All right, a little something strange for a little piece of change, right? And so right now, them little contracts is over here paying. I'm sitting there checking them out still while we're talking here. They paying. They paying out here, right? And so this thing can get a little ugly. It can easily, go down to 70, 80 cents. That would be great, right? That'd be great, right? That's won't get no pushback from me if it does that, right? Just like they say, I'd be loving that, like the McDonald's commercial. All right. But nonetheless, so there go the SP 500 bouncing again, playing that support, like we said, that 433.10, like a boss, and starting to make that wild move like it typically does in the back end of the day, going to the close. If you have momentum, the SP 500 is using that support line of yesterday's closing price as the new launching pad to go into what tomorrow, potentially with some conviction to see if they can get some good numbers that may keep the market, treading water just another day, because the market right now overall, again, is still in a downtrend. Either way you look at it, the market is still in the downtrend. Even if you look at it from the weekly or the monthly, you still have all this here to account for, right? And so everybody everybody that I know is praying for 440. If they feel like they can get the market back up to 440, that's a nice little catch out area, right? What do I mean by that? Meaning, if you can get the 440 ahead of all this, crazy egregious news with Fed tapering and whatever, guess what? They can try to get one more run to try to take out the high. They may get one more chance to take out the high. I myself personally feel like that's an uphill battle. Not to say that it can't happen, but it's an uphill battle, literally. Right. So bulls are still holding off. They're being optimistic. They're saying, man, we get one more run before they get, the tapering stuff really take over. And we'll try for, man, look at that CE stock breakdown even more. I just had to stop for 2 seconds, right? Hey, we still in the middle of trade. So this is what I do when I'm trading live, right? I have to politic with myself, right? So I got money out there that's hot right now. So I just looked up and I see that thing just dropped down from 90. Now we're down to 88 cents. This CEI, this thing popping, right? This baby is still dumping. Look at that there. Look how I just fell off the back of the truck, the back of a pecan truck here at 3 o'clock. Well, not 3 o'clock, but 1300 basically, right? Roughly around 1 o'clock, it just began its descent to the downside. And now you had that big, bullish, bearish engulfing candle where it just had to flush it straight down hard, like this candle here, like this guy right here. It stops, goes sideways for a little bit, right? And then, trends low again, pull back. So all they're doing is just riding the 9, I have to hit this purple line. That's my 9 moving average, right? So it's just riding that 9 moving average all the way down. See how you're respecting it? It's pinging up at it, going lower, pinging up against it, breaking lower, right? Running back towards again, breaking lower, right? And now it's starting to expand away from it, push away from it. So that's a sign that definitely the bears are in control. Bulls in trouble. The stock is highly oversold on of course, in the intraday. Look at the down here, the red down here. That's meaning it is strictly oversold. But that doesn't stop, right? If there's a need for a stock to sell off, well, RSI typically, it has its place, but it doesn't necessarily carry any principal weight at this point. It's like, no, the stock is garbage and they're gonna dump it. And so basically that's what's happening. They're getting rid of it, and my little puts over here are just banging. I mean, literally they all up now, about $14 a piece. That says 14 times 5. Y'all do the math on that, right? Right. So again, they were only, 20 cents a piece, or $20 a contract. I bought 5. Again, that's $100. And each contract is up $14 per contract. So that's 14 times 5. Right. So that's some fishing money, right? I got me some lure money. I could buy me some baits, some minnows or something. I go out there on that boat. Right. So get excited, and just learn how to make little money, in the most odd places. Well, that's what makes this stuff fun, right? That's what makes this stuff, ideal. Again, it looked like it wants to go low. Like I said, if you break that 90, you can easily flush down in 80 to 70 cent area. Then, whew, it can get a little ugly, right? It can get a little ugly. You said you have 260 puts expiring Friday, Brother Mathis. I was hoping to get it somewhere around 285, 290 before I sell. Hey, very much we may can hit that area this evening. We might can hit it after hours, right? Who knows, right? I mean, I'm not going to tell you when or not to sell your position, but apparently I don't know when you bought it. If you bought it today, especially after I dropped my little piece this morning in the group, all right, or maybe before, because we spoke about this during the Merck the Merck show that we did. That's why I was like, hey, as of now, the vaccine stocks are going to be weak with this Merck news. Over time, they will diverge and start trading in tandem, but as of now, that's more pressure on the vaccine plays like Moderna, right? So that's when I got short. I was shorting it then. Right? I shorted it in my Robinhood. Not Monday, Friday. I took a short position on it Friday, right? And so look, I'm loving it, right? I'm loving it, right? So that one over there is banging. All I'm saying is banging, right? Right. And then I bought the other one yesterday. I bought the other contract in my Tastyworks for Moderna yesterday, right? Up around that point. It was around like at 335 and change, right? I bought it around that point. And as you see, the flush here is just rolling. It just rolled over, right? And that news that came out from, about, the vaccine being pulled in Sweden and Denmark, that just added more fuel to the fire. Oh man, that just added more fuel to the fire. Not see, you see how it's dripping into the close? It's still going lower. It's still dumping into the close. Now let's see what it looks like, on the regular intraday chart, because it looks really good on the intraday. It looks great on the daily chart, of course, but when you look at that thing on the intraday, be like, oh man, this right here don't look too good here. They don't look too good. You see right there? It's bouncing up that 300 again. Y'all see right there? It's right back at that point. It's trying to hold. Well, not 300, excuse me, that 302 point. 302.50. That's 302.50 area, I think. What is it, 303 or 302.50? Let me see if it move out the way I can see. I think it's 302.50. There we go. And it's still dumping. Let me blow it up a little bit. There we go. There we go. Yeah, you hitting that cash register right now, over Jeremy at 302. Right? I knew 302.50 was the point there, but yeah. Yeah, look at it. Oh, we dumping. Oh, we dumping it to the close. Look at that. Look at that. Look at that. Oh, you better be patting yourself on the back right now, over Jeremy. Right? It made you some nice little guap, as they say, right? Young folk call it. Yeah, some guap, man, maybe some guap. Look at that contract paying out right now. So let me go check. I don't even check that one on Robert because I know it just swollen. But I'm gonna check this one on Tastyworks real quick. Right? Let me go check that one out real quick. Yeah, that thing they're popping. I paid on that one on Tastyworks. I paid $1.14 per contract. It's up right now $480, right? So $1.14 turned into $480. Right. See, it's that kind of stuff, right? So that's a nice little bag. Right. Man, you gotta love this stuff. Right. Gotta love this stuff. Right. So now it's trying to defend that $300 support, right? Again, if it was a fifth, we all be drunk, they say. But if that 300 support breaks before the bell rings, we got 5 minutes now. Mind you, that will be a massive psychological defeat for the Bulls. That would be a massive psychological defeat for the Bulls if we break that 300 support before the bell ring and look like we want to try for it. Look at it. Look at it. Oh, they dumping it. Oh, they getting out of there. They are getting out of there. I mean, y'all seeing this stuff in real time now. I'm so tempted. I am. I'm gonna be disciplined. I'm gonna leave the one open in Robinhood. I'm gonna close the one in Tastyworks. If we close below 300 at or below 300 before 4 o'clock, I am definitely going to close that one on in Tastyworks, right? Because the bird in hand beat one the bush, right? That little $114 turned into 500 plus. I'll take it. Right? I'm not going to even, push back against something like that. When I literally bought it yesterday. I bought it yesterday, right? And I played it for that base of that same sentiment. There's still more downside, risk, or more risk to the upside at this point. For anybody that's trying to trade Moderna at the point where it's got a lot of these headwind pressures dealing with, this Merck pill, the news starting to spread. And on top of that, again, who knew that news would come out about the whole Sweden thing? But hey, that's the market, right? It happens, right? It happens. All right. So as of now, we loving it, right? We loving it. All right. So let me y'all got to bear with me for 2 seconds here because I am working. All right. I love y'all and everything, but I got to get my money now. I got to get my money too. Right. So yeah, so let me I'm putting a stop loss on it actually. So that way if it bounces back up towards it, then yeah, I'll just go ahead and close it. And because we literally, right, like we're at 370. We got 3 minutes for the bell. So yeah, we're literally right at it. I mean, y'all seeing this in real time, so this is great, right? I love when this stuff happens. But I mean, they defend that 300 now. I knew this was gonna start inside the 300 area. They fighting to defend that 300. Oh man, they fighting. Their Bulls are fighting down there. It's like, oh no, get that thing off the 300 point. But I have no doubt that it's probably gonna break below it. Potentially, if not during the intraday, may do it after hours. But right now, there's a massive fight. There we go. They trying to turn it. They're trying to get that thing off the lows. They trying. They are strictly trying. You got what, 2 minutes here before the bell? 2 minutes before the bell. And what a fight. What a fight. There we go. Now they're trying to turn. There we go. Now you have a mad spike up. You got what? Yep. Still got about a minute and 30, 40 seconds probably before the bell here, if that. S&P 500 sitting comfortably over 434. So, S&P 500 looks pretty safe going into after hours above 434. That's positive. Yeah, so now we just play the game of, wait and see here. But again, after hours, it can get a little ugly for some of these little stocks that are, that had showed downward pressure early on in the day. And that's to see how they're going to close out. All right, so yeah, they're definitely trying to get that thing up off the lows now. They're like, hey, get it off the lows, bro. Get it off the lows. Right? They're like, save it. Save it. All right, so yeah, so right at the bell, I'm definitely going to, guys, hold up one second. I got a phone call from my student loan scenario. 1 second. All right, I'm back. All right. Some student loan people calling to check up on, make sure everybody know this when the automated call. But my loans are about to be eradicated. Right. I'm pretty much getting all my student loans wiped out. Guys, you already know about it. I posted all over Facebook. So I'm in complete discharge mode right now. So they say I think it takes like about 30 to 60 days, they said, before it moves through the system. All right. So yeah. Anyway. So yeah. So as you see there, look at the market there wicking down here on the 300 on Moderna here. All right. So I sold that one at Tasteworks again, bird in hand, one, beat one in the bush. Right. It definitely beat one in the bush. So go ahead and take that bag. All right, and we'll let the other one keep playing itself out. All right. So definitely shout out to you as well, Oba Jeremy, if you're sitting in it. All right. And as we sit here looking at Levi's, so Levi's again has earnings here after hours. So we'll see what comes from that. I don't know what time they actually report. I forgot what time did they report? They report maybe around, let's see, I think they report around like 4:05 or something like that. Hey, what's going on, family? Ramirez, what's going on? I see you. Over Rich B in the building. What's going on, family? Peace, power, and profit to you. Right? Right. So you guys came in the building. I'm gonna check this real quick just to make sure. I think they released at 4:10. All right, so they got earnings at 4:10. So you guys can probably see that right here too. All right. They got earnings at 4:10. All right. So yeah, so we'll wait to see what what that's all about since we are live at this point. See if all right, the consensus is that they need to have at least 38 cents EPS and revenue around about 1.46 billion, right? If they can come in at or exceed that, then that might help them out if they even have soft guidance, or maybe not, right? But as of now, the consensus is that they're feeling very confident a little bit about Levi's going into earnings for other reasons. I mean, look at the expected quarterly earnings report off that last year. They blew it out the water, the last one. And so I don't know if they could see that this time, but nonetheless, short-term, intermediate, long-term earning estimate and analyst sentiment seems to be pretty solid for Levi. Investor sentiment may not be so because obviously inflation. Obviously, markets are like all over the place. But big money is like, yeah, we still gonna ride the wheels to till they fall off. All right, good luck though. Good luck for them in that perspective. All right, look at the SPY run here. I might hit me some SPY up a little bit here before 4:15 because y'all know I mentioned that last time that you can trade the SPY. Right, you got 15 minutes to trade the SPY after the market. Close at 4:00. Right, especially if you got like a major account like TD Ameritrade, something like that. You get to trade the SP 500 up to 4:15. Right, it's part of the futures timeline. Right, so just to put that out there. All right, so let's see here. Let me see here. Okay, yeah, so I want to play the bounce for tomorrow. I might, yeah, because right now the market can only do so much after hours. Yeah, let me play me in the money. So bear with me, guys. I'm trade. I'm working. Y'all know how this stuff go. It made me, well, how much I made today? Including the ones that I hit over there, my calls, the Robinhood, the Moderna, even though I didn't close that Moderna contract out, so I can't really relegate that as what they call locked in money. But nonetheless, that position is up nicely. So we say that's what buck 80 on that one over there, and then my SPY put. Excuse me, SPY. My SPY put. The SPY puts earlier. 500 plus this one here, contract Moderna. It's around about $1,100, $1,100 to $1,200. It's around $1,100 type of day, right? So definitely, grateful and thankful for that. Worked hard for it, right? Worked hard for it, as we always do. So that definitely keeps keeps the ambition wheel spinning, as they like one would say, right? So hopefully tomorrow be just as fun, right? So we'll see how the markets kind of react here on the back end of the day, going until tomorrow. As you see here, let me move that actually. Where we at? Blah blah blah. We're all drawing. There we go. So as you see the SP 500 here, look here, it just bounced off that point there. There we go. And it's trying to trend back towards that 440. I really believe they're gonna try for that 440, right? They just slammed the brakes on it, at a point where they just really don't want to give bears that 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 I don't know, the momentum. We'll use that word. They don't want to give the bears the momentum. It feels as if they break that support, and flush it lower, anywhere below that 428, that would be problematic it'd be problematic for the SP, right? Because after that, clearly at this point, since we tested 426, all that stuff like that already, they know 423 or 420 is just right, right in the rearview mirror, right? It will be in the rearview mirror at that point, because now, they hit a critical point that they was really, trading for, so to speak, right? So, yeah. So right as of now, they just turning it higher. They're definitely sending it higher here. So yeah, let me get me a scalp call on S&P 500 here going into tomorrow, right? Since I'm in the after hours, I don't have to worry about, fighting. I don't have to worry about fighting these doggone intraday algos. Look at Levi looking like they want to dump right now. Go for the grace. Go for the gusto, Levi. Break that 24 support. It's gonna look ugly for you. All right, it's gonna get down right ugly. So we got 434. So we'll do Let's see. Let's do. That's additional. What? That's extra 20. So that's about. That's sitting at around for the 8th. Hmm. The same if you do that one. So yeah, let's do that. Let's do that. Let's go. Let's go here. All right. Give me, guys. Bear with me. I'm still working. All right. So y'all know how it go. All right. Y'all know how it goes. All right. So it should be set for all right. All right, yeah, so I got field. All right, so I'm in. Now, even though it turned up on me quick, hit like 435, I was trying to get it at that hoping to get around about 430, 470, and it jumped up an extra 30 cents while I was talking. But I just bought a couple, right? I just, for the sake of our conversation here, where I'm sitting there talking about, they reversed it off that going into tomorrow, jobless numbers. I play that intraday, I don't know, volatility, because that's basically what it's going to be. All right. So I bought uh, two of the 430s, and this is for Friday expiration, of course. Hoping that they can try to test that 438. Right, that's 2 points away from 440. So I'm just basically playing the middle, right? Y'all know how I like to do this stuff. All right, I'm just playing that middle point right there. All right, so at 438. Matter of fact, let's go to a shorter window here. You'll see that it sits right at this little point right here, right? A little bit below the 20-day moving average here, which is 439.25, right? So that way, if they try to try for that 20-day moving average at least 439.25, that give me at least $1.20 of potential, cushion, right? Who knows? But as of that point, it looks like that'll be a good little strike price. I should have bought the 437, but whatever. Right? I ain't want to spend a whole lot on it. Just bought a couple of them. Right. Right. So we'll see, if things hold up for that tomorrow and it pays out. Yeah. But not tomorrow, between that tomorrow and Friday. But tomorrow I'll probably be out of it tomorrow, right? Because it depends on how the market going to respond to those job numbers, and how the sentiment may feel about going into the non-farm payroll numbers Friday. If the Feds be feeling a little skittish, and they think about up in the ante on tapering, which we kind of know that's the sentiment anyway. But if tech gets spooked, is my point. If the tech stocks get spooked tomorrow, then yeah, that may cause a pause in the broader market and pull back, right? So that way, at least I'll be able to get out with less risk, hovering over my situation, right? So yeah, so Levi's earnings is out, guys. Levi's earnings is out. Levi's earnings per share. Guidance. They they got the guidance. So 129 to 133. So they're coming a little light. No, it's a 143 to 145 versus 130. Oh, okay. So no, they updated. They got they got us. They increased it. They went from 129 to 133 EPS to now 143.145 versus the 133 estimate. So they increased their guidance. Wow. Okay. They bold. So I guess they ain't really dealing with supply chain issue. Okay. And they actually beat, as you can see down here. Let me pull this down here. They beat the EPS. All right. And that's a nice little beat too. And they beat the earnings, revenue. They beat on revenue and they beat on EPS. The EPS came in at 48 cents, earnings per share. They had an estimate around about 36, 37 cents. I think the consensus on Earning Whisper was like 38, 42, somewhere around there. Revenue came in at 1.5 over 1.48 billion. Right. So yeah, I mean, the numbers look good, but again, like I said, hey, you have to blow it out the water. Now that's a good EPS beat. Now I'll be the first to say that's a good earnings per share beat. But again, supply chain issues are things that keep markets spooked. right? If they feel like anything in the conference call where, Levi's may have to kind of explain their way through that, and, how y'all dealing with the supply chain issue? That's typical stuff the analysts are going to ask. They got to be able to answer that with a straight face, right? Because if there was any kind of crackling in their voice and they saying, analysts like, we're gonna, pause some of these dollars a little bit till this thing come down some more. But as of now, adjusted earnings per share, okay, yeah, they see Q4 at around about 38 cents to 40 cents versus 39-cent estimate, so slightly increased there. But this EPS for this quarter is a massive beat, right? A massive beat. It's 11-cent increase on the EPS, right? And y'all could do the math on that in terms of percentage gain. That's a nice EPS beat, which it was already known, like I spoke about earlier, that they were going to have a decent number expectation, but hey, we'll see how things turn out. Yeah, so as of now, Levi's is is just sitting in the middle in no man's land, right? Expects margin, sees EBITDA to be what EBITDA, right? Earnings before interest and tax to be a margin exceeded expectations. Yeah, so they exceeded it. Levi Strauss says currently 4% of stores around the globe are closed. So 4% of their stores around 4% of their stores around the globe are closed. Now, I don't know what that metric is based it off of, like whether they had less open and now they're opening more, so only now 4% is open, or they're already closing more and then they close more, right? Who knows? And that's maybe the tally, but I think that's more so that they had more closed and now they starting to open more of them up, so now they're only sitting at 4% that are closed as opposed to not. All right, so yeah. So now all this news coming in about the EPS beat, so some people looking at that maybe like, okay, so as you see, the stock is trying to bounce a little bit here. It's definitely trying to bounce, right? It's trying, right? It's definitely a little engine that could. I think I can. Right. But there you go. So there you go. Open Marquise. I don't know if you played that. So you bought them Levi back in the old school days, high school days, right? Right. But right now, Levi's is trying to get above that $25 point. It's trying. A lot of people still digesting the earnings report. Y'all know how this stuff goes. Sometimes it take a little minute, and the market still finicky because of all the other stuff, right? So who knows, right? It may just catch a little bit, but I'll be more of the mindset to catch the earnings call to see exactly what they're going to speak about the supply chain scenario, if they're being affected by it or not. That matters, of course, right? Definitely. If they're going to speak about the price of cotton going up, that matters, right? That's commodity, raw cost goods go up. That means, hey, that's pressure, right? That is pressure on them being able to meet or exceed their goals as far as revenue, their guidance value going into the next quarter. But they do have the holiday season coming up. That's a net positive, right? And there goes Moderna. Moderna getting ready to break 300. Moderna like it wants to break 300. All right, brother Jeremy. All right, brother Jeremy. You probably finna get extra little couple $100 here after hours added to your contract. So get excited for that. Just in case, right? They say just in case that thing break and go lower, right? So it looks like it want to break down. So, all right. But anyway, so yeah, so let's do this here. Right, because there is supposed to be some more news coming out of the White House, potentially, right? Let me stop this here. Oh, I didn't have my screen sharing. What's going on? Well, y'all see me. Y'all know what I look like, right? Y'all want to see my face, right? I got hit you with that Dave Chappelle. Y'all want to see my face? Y'all don't want to see my face. There it is, bro. Got that COVID. All right, just cutting up a little bit here, right? Got to keep that mask on. Got to be immune, right? right? So, and since we're talking about Moderna stock, why not go on and put on the COVID mask, right? Got the N95 on, right? We got the the awesome back skate going on back there, the classic, right? You got the classic there, right? We got the Fresh Prince of Bel-Air coming to hang out with Marty Marl, right? Right. So, and Carlton over there hanging out with Shanae. Y'all see it. All right. What's going on, everybody? All right. So yeah. So I want to check and see. Let's see here. Let me see here. Y'all see on the background. Yeah, man. Classic, right? Why is YouTube acting up, man? This stuff been acting up lately. They're trying to give me that, that COVID. All right, so yeah. All right, so let me check and see real quick if there's anything out there for us on the news cycle real quick, because I'm not gonna be on that much more longer. Just want to kind of come on and premise the ideal of what what I think the market may be trying to signal here. Now, of course, we didn't get a chance to even talk about Facebook. We can hit that up on the way out the door too. Of course, that's very important. Only to the degree where they came around and bought the dip in Facebook anyway, so they're refusing to let it just kind of plummet, which you kind of know that was going to happen, because anytime Facebook has to go before like the Senate or they have some kind of congressional hearing where they're finna be on the hot seat, typically what happens is Wall Street tries to front run it. Right? That's what they do, right? These people are parasites. They can care less about if the business practice is bad or not. They still think long term they got their money, loaded into these stocks. There is no more relative principle or principle code for some of these people. They don't think like that. They only think about is profit. The same thing that, matter of fact, Facebook is in trouble for putting profits before the patrons safety and welfare. Of course, in this case, these young teenagers who are having problems with their personal appearance and suicide because they're addicted to the website. Then it's starting to get a little ugly now, because they finna start try to put together some policies to come after these social media giants. Of course, in this case, more so just really Facebook, right? And this is actually gonna be good for Snapchat. Why? Because Snapchat in general is more tiered towards younger people, like teenagers, like tweenagers, actually. People between right before you become a teenager, right? So that I guess what 10 to 13, 10 to somewhere around there, right? So they do better on Snapchat, right? Because you don't have all that stuff on Snapchat that you get with IG, Instagram, all that. Your Instagram models up and down the doggone feed, and these little kids looking at them like like, I don't look like that, messing up these little kids' self-esteem early on. So, hey, but personal responsibility comes into play too. So parents got to be very more strict on maybe keeping their kids away from that the best they can, because you know how kids are. They're gonna sneak and do what they're gonna do. We all been kids at some point, young kids like that, teenagers. But I don't know. That's the world that Americans building it out. That's the social norm of this country, right? It's all about profits, right? That's all about them profits. Where them profits at? Right. But yeah, so let me see real quick here. News, look at yeah, y'all talking a little mask. Yeah, man, got my little mask on. Right. Got the Marty Marl and the Fresh Prince in the background. Classic there, classic little. So let me see something real quick here. Trying to see if there's any I'm pretty sure I missed a couple things because I wasn't able to, watch every single. Uh, let's see. Blah 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 blah. Okay, let me get over here. Move that out of the way here. Let's go here. Let's see. I know there was let me see what she's talking about. Old Jan Pasaki talking about. 1 second. Let me see if y'all can hear that speaking on without me sharing it. See if they talk about anything fall to debt ceiling. No, I think I am going to have to share it. Let me see. One second. Ah, yeah, that's exactly what they're talking about right now too. Um, am I going to have to change my? All right, so yeah, it's different on Zoom than it is on StreamYard. StreamYard will pick it up. So I'm going to have to change. Yeah, it's different on Zoom than it is on StreamYard. StreamYard will pick it up. So yeah. What's going on over Dollar Wheel? See you in the building. Peace, power, profit to your family. Yeah, so let me do this here. Man, see, I know I should just stick with what I've been using until I get all this stuff down packed. See microphone. Yeah, so let me do this here. Man, see, I know I should just stick with what I've been using until I get all this stuff down packed. All right, there we go. Sorry about that.
Of course, but he doesn't stand for the fundamental right. I assume you.
Yeah, I missed the part that I wanted to share, but anyway, they were talking about the idea that if they're going to do something about the debt ceiling stuff. Now they're going into all this school stuff, with the idea that these people started to protest these schools about these mask mandates and stuff like that. It's starting to ramp up. They're getting violent, showing up people's schools, all that stuff. All right, so
Of course, he was aware of the French.
All right, let me see.
Let me finish. Let me finish. I know John Kerry quite well. He, of course, was aware, the president, of the French being displeased about the deal with the Australians. John Kerry also speaks regularly to the French as a part of his role as the climate envoy. He's someone who also served as Secretary of State. He's someone I alone traveled to France with him 25 times. He, of course, conveyed to the president what his read was of what they were specifically unhappy about and how to help address it.
He said this president's first love is foreign policy. So why doesn't he know about these things in real time?
Of course, he knew about the French being displeased. Let me finish.
Yeah, Biden been getting a lot of bad press lately. He's been getting a lot of bad press lately. They've been wearing Joe Biden out. I ain't got no problem with none of it because I don't play them politics games.
Many members of his national security team, but that certainly is
One
not
second,
what he was intending to convey. Go ahead.
Let me ask you quickly. Yesterday, the president said that he would be speaking with Mitch McConnell as it related to the debt limit. Has that conversation happened, and what did he tell him?
They have not spoken. I think what the president has repeatedly conveyed is that he's certainly open to, as he has shown throughout the course of his presidency, having conversations with Democrats and Republicans when he feels it would be constructive.
They will be speaking. So he was saying they will at some point.
At some point, if it's constructive in moving things forward.
Does the president trust Mitch McConnell to be an honest broker in this process?
I don't think this is about trust. This is about, he has known him a long time, but this is about whether you're going to be a leader and take steps that are not based on political calculations and more based on what's in the interest of the United States and the full faith and credit of the United States.
The president discussed that there was a possibility of a filibuster, a carve out as it related to the debt ceiling. If that were the case, would the president be open to a filibuster carve out for voting rights? Where does that line get drawn for the president?
The president was just simply conveying that there are a range of options that leaders on the Hill are discussing. I think you all have reported that, or your colleagues on the Hill have. Nothing more than that. We'll be in touch with them and we'll see what the next best options look like. But what is very clear is that there is an easy, risk-free option here that Republicans could allow Democrats to vote to raise the debt ceiling. We could be done with this today.
Why wouldn't the president, given that relationship he has with Mitch McConnell, just call Mitch McConnell and have this conversation with him? Why do this?
What's the conversation about?
I don't know. They have the relationship. He's the one who said he could bring the two sides together. So wouldn't there be some value in having that conversation?
We know what the risk-free option is here. We know what the clear path forward is here. And I think the president has made no secret about his belief on that. Go ahead.
Has the president had time to absorb the criticism of the Fed chairman? And then specifically, what does the White House believe should happen with Fed policy about investments made by top officials there?
Well, we obviously leave the independence of the Fed to an independent Fed, Federal Reserve, and I'm not going to speak to that from here. The president's confident in the chairman of the Federal Reserve, and beyond that, I don't have any personal announcements for you.
Given that confidence, given what you just said, I mean, how close is he to making a decision on that?
I don't have anything to preview for you at this point.
Yesterday, the president said he would sign a reconciliation bill that included the Hyde Amendment. You told us earlier this week that he remains opposed to that. So is he backtracking on a campaign promise, something that's a lot of his supporters believe strongly in?
Well, the president's position hasn't changed. The context of his comments were that there's still a negotiation happening. There's a range of views. His view remains what is reflected in his budget, which is that getting rid of, which he released in May, which shows that getting rid of the Hyde Amendment was a priority. That remains his position. This is a package that's still being negotiated, and he said that much last night as well. Go ahead.
Just confirming what you told Peter, the president, when he signaled yesterday that it's possible that the Senate could change its rules, that we should not read that as him expressing support for that notion.
The president was simply reporting out what you already have reported out, which is that there are a range of options being discussed on Capitol Hill.
Separately, the ambassador designate to India was seen reportedly at an event in Los Angeles last week, an art gallery event that featured the artwork of the president of the country. The ethicists who have pointed to this arrangement have expressed concern that the president's son selling art could potentially put the president in a situation where those who seek jobs either in this administration or favors from this administration and could put this White House in an awkward position. First of all, what is the White House's response to the fact that an ambassador nominee was at this event? And secondly, should we expect to see more people who seek jobs in this administration attending events like this?
Well, to be clear, we've spoken to the arrangement that is run by the gallerist and Hunter Biden's representatives that the White House provided suggestions for. I'd refer you to the gallerist for questions about the event and as well as the representatives of Mr. Garcetti in terms of his attendance.
Just to follow up, this is exactly what ethicists said they were worried about.
What is specifically?
The fact that the president's
That he
son,
reportedly attended an event?
well, the president's son would be selling artwork and then meeting potentially with people who would seek to buy it. If you have attendees at that event who might be seeking either jobs in this administration or favors from this administration, isn't it an awkward situation to put the president in?
Again, the gallerist has spoken to, we've spoken to the specifics, what the gallerist has agreed to, and what recommendations were made. I've done that several times. I don't have additional details for it from here. I put you that. Go ahead.
So does this White House not have any concerns about the photos that have emerged showing Hunter Biden at that gallery alongside prospective buyers?
I pointed to the gallerist on specifics of the restrictions that were put in place.
Right, but what about the position of the White House? This is the president who ran on being transparent, and you've got.
And we were very transparent about what recommendations were made to the gallerist. And I would again point to them or the many times I've spoken about that for me.
Should on doing away with the filibuster changed?
Nothing, no, it has not changed.
Go ahead.
Thanks, Jen. The administration reportedly will invest $1 billion into making rapid testing COVID kits available. But there are concerns that the tests will be too expensive. I think a lot of Americans are wondering, is there a universe where these available tests will be free or affordable or at least less expensive than $25 a pop?
Yeah, so there's no question. Huge increase in an interest in testing and getting tests and making them and people going out and being able to get them easily. We announced a $2 million investment in September. So right now we're on track to double the number of rapid at-home tests on the market by early November. And we're also now on track to triple the number of rapid at-home tests on the market by, and thanks to the approval of ACON, this Monday, which accelerates the pace, we're now on track to triple the number, not double, I apologize. So right now, with these investments, we'll be at 200 million tests per month starting in December, with tens of millions more coming on the market in coming weeks. And we're also working to ensure that these tests, in addition to making them more available, so you go to CVS or Walmart or wherever to get them, we've been working hard to make sure they are accessible and available in pharmacies and community centers, in schools. So we're also working to do that simultaneously and separate from that. We recognize there's a need. We recognize we needed to do more. And we are pleased by the fact that we are now on track to not only triple by November, but also quadruple by December.
There was a school shooting in Texas today. The school safety group Everytown says that this year has been the most dangerous back-to-school period for students since they began tracking the data in 2013. That some 30 instances of gunfire on school grounds since August 1st, and today's shooting means that number is out of date. Is the administration discussing ways that schools can keep children safe from school violence?
Absolutely. I mean, one, I would say the president has been an advocate for doing more for gun safety measures through the course of his career. Not only did he fight to get the Brady bill passed, he fought for the assault weapons ban. It remains a cause of his public life in office. We, of course, are frustrated by the inability to get common sense gun reforms through Congress. We should be able to get universal background checks approved. They're supported by the vast majority of the public, as are assault weapons bans. But in addition to that, we also have taken a number of steps, both by working through the Department of Justice to increase our strike force teams that are going out to specific communities and cities to help address violence. A lot of that is driven by gun violence. That's something that we've been implementing from there. And of course, our Department of Education is engaged in this effort as well.
Go ahead.
Thanks, Jen. Yesterday's ban by Facebook whistleblower underscored several major issues with the company, including, as long as many senators pointed out, issues with Section 230. On the campaign trail, Biden said that Section 230 should, quote, immediately be revoked, and that it should be revoked because, quote, Facebook is not just an internet company, it is propagating falsehoods they would be false. Does the White House stand by that assessment for Section 230 given the regulations?
Well, the president has long said, as you referenced, that tech platforms must be held accountable for the harms that they cause. And he has been a strong supporter of fundamental reforms to achieve that goal. This includes Section 230 reforms. It also includes privacy and antitrust reforms, as well as more transparency that should also be on the table. And he looks forward to working with Congress on these bipartisan issues. He's also called, I would note, because there were a range of issues that were raised during this whistleblower's testimony yesterday, on the FTC to adopt rules to address unfair data collection and surveillance practices in his executive order on promoting competition in the American economy. So yes, more needs to be done. Reform should happen. We also need to do more on privacy and antitrust. And certainly watching testimony yesterday raised a lot of those issues again for people. Go ahead.
Does the president have any intention of speaking with Senators Manchin or Sinema at all this week?
I can't predict for you day by day. We have been in touch with Senator Manchin and Sinema at a senior staff level, and certainly I wouldn't rule it out.
I wanted to ask a follow-up question on an earlier question about the Hyde Amendment. The president has not been shy about his opposition in recent years to the Hyde Amendment. As you mentioned, he made that clear in his budget blueprint. He made that clear as a candidate when he was running for president. So can you explain why it is he's saying that he would sign this bill
either way, with or without this language.
It's reflecting that it's a negotiation. It's ongoing. We don't know what the final product will look like. Go ahead.
It's a little bit about energy prices. Gas prices in the US are fairly high. We're seeing exceptionally high prices of certain energy costs in
Yeah.
Europe right now. Is the US domestically considering a release from the SPR to bring down?
I'm not going to make any prediction of that from here. I would note that we have seen, as you
Yes,
said,
gas prices are
some
soaring
shift,
under Joe
in
Biden.
parts of the country also as a follow-up to Hurricane Ida, because the hurricane hit a region that is a key center of the nation's oil.
Sad thing about that, they actually have oil barrels in reserve. All you gotta do is just release those oil reserves, open them up. That'll help bring the prices down. But they,
address that,
I don't know.
including at the time authorizing several million barrels.
They running a
strategic
shady little
reserve
operation thus
exchanges.
far.
We
Right, they ain't
also
really
taken
getting
steps,
nothing done.
Including
These
engaging
little
with members of
Democrats.
OPEC. We've also taken steps to reach out to the FTC to ensure they are using every available tool to monitor the U.S. gasoline market and address any illegal conduct, but I'm not going to make any other predictions at this point in time. We're continuously monitoring. We'll look to take additional steps as needed.
Are you or would you consider restricting LNG exports to, I guess, head off the type of shortages and price spikes that we're seeing in Europe?
I'm just not going to make any additional policy predictions at this point in time.
Broadly say, overall, these are fundamentally price pressures on, renewables, fuel, putting into costs to some degree.
Yeah.
Do you worry that this could impact the pledges that countries are willing to make? Will other governments get need about going green at a time when they're facing brewing sort of political crises at home for really skyrocketing prices of non-renewable fuel sources?
Certainly hope not. I mean, I think what COP26 is about is to continue the conversation on the international stage at the leader level. That has been going on below the leader level continuously, basically, about our need to work together to address the climate crisis. One of the greatest national security crises the president sees. A number of other world leaders agree on that front. Certainly, we all want to keep gasoline prices low, but the threat of the crisis, the climate crisis, certainly can't wait any longer. Go ahead. Go ahead.
Yeah, thanks, Rich. On the, you sound pretty lukewarm about the McConnell idea. If the Democratic caucus was to get behind it, is it a given?
I believe that over Iori, they definitely trading it because somebody got to be accounting for all these different, again, the whole idea of the OPEC meeting that they was kind of using as leverage to say this latest oil spill caused more of the problem, especially with natural gas starting to skyrocket. As another reason why oil in itself has to just rise apparently because of that. They did, they got very bad, I don't know, negotiating skills when it comes to being able to really meet with that, that OPEC, organization to kind of get this, oil issue under control, regardless of the hurricane. They can't just blame it on the hurricane alone, because that's what you have, oil in reserves for. That's how you have, the ability to negotiate with OPEC for them to have them, add more barrels, to the surplus. Again, they playing games. But gas is up almost like a whole $1 a gallon in certain parts around the country. Yeah, they playing games.
See what work could be done.
And again, for what it's worth, Trump was all over that too.
So I don't know that
Trump was like, no, oil don't need to be no more than about $55 a barrel, right? And he kept it that for a good little part too. He was good at subduing the price of oil. So it wouldn't necessarily be a good cost at the pump. That's just facts, hate like, love it, indifferent to that, but prices of gas been going up, substantially since Joe Biden been in office.
Through appropriate channels, of course, in touch with Taliban officials. In terms of the specific numbers, I'd point you to the State Department, and they have the most updated number on that, given they oversee that process. Go ahead.
There's been some reporting that saying that Democrats are planning to accept the short-term debt remittances. So given that we now have some reporting on that, can you just give us some guidance on what the White House thinks about that idea?
Not yet. I have to dig further into that reporting, not to question it, and talk to the team here about where things stand. And as far as when I came out here, they were still meeting, but we'll venture to get back to you as soon as we have something more concrete to convey.
Thanks, John. When the president was talking today about Republicans and the debt ceiling, he said, if they don't want to do the job, just get out of the way. We'll take the heat. We'll do it. mean by that? What political risk is he acknowledging there for Democrats?
Well, I think one of the reasons we're at this point is because Republicans in Congress would rather bet on a misleading and inaccurate campaign season talking point. We're not betting that that's going to work, but his point, the president's point is, regardless, Democrats are willing to vote alone without any Republican votes to raise the debt ceiling. You just need to allow us to proceed with that vote.
On the testing question that came up with the rapid test, this $1 billion investment was quadruple the test by December, in addition to everything else from the past couple of weeks. But why has it taken so long to get this rapid testing to this point where it will be by December, when Europe is flooded with rapid tests? Is it the authorization process and the timeline of that?
You know, America like playing games. Why are you asking that question?
One of the things we've been working on is to increase production.
Rapid
as you
testing.
know, and also increase, I would say that the demand for these tests.
They still trying to
here has
mandate the
increased
vaccine.
A lot in the last several weeks, so we're also working to meet that and ensure that we are meeting the moment here in the United States.
But see, this where it gets tricky, because if they do up the ante on these rapid testing protocols, and that information comes out about that Merck pill that shows that it has, you know, some value
I mean, again, we just announced
of you know, constant efficacy value, then guess what? You being able to have a rapid COVID test and the ability to get that COVID, you know, morning after COVID pill, that'll be problematic for vaccine stocks. Literally.
Accessible, cost-effective tests out there and available to the public. Go ahead.
What plans does the White House have to address the risk of oil spills from existing platforms, existing leases that are still operating?
You mean like the one that happened in California? I would really point you to the Department of Energy for specifics there.
Policies on stopping future leases, possibly, things like that. But, you know, this is an ongoing threat, you know, that happens as, you know, offshore drilling continues. Is there an interest in investing in the infrastructure of the pipeline to enhance their safety, shutting them down? You know, what are your thoughts on that?
Well, again, I think as we've seen, and there's been an ongoing investigation about what exactly was the root cause here. So I don't want to kind of speak to that as that's been ongoing, but beyond that, I would point you to the Department of Energy.
Things on the spill. Does White House have a working theory on what caused the spill? And secondly, you would update on federal resources that have been dispatched to these populations.
Sure, I think I do have an update on federal resources. Let me see. On the leak, just so I don't forget to answer this part, it's still under investigation. As you may know, the oil has stopped leaking. The pipeline has been removed from service. In terms of our government efforts, 4,788 gallons of oil have been recovered and 11,360 feet of containment boom have been deployed. As of yesterday, 6 miles of shoreline have been cleaned, 328 response personnel with additional assets are on,
brother Iora, they're in the phase 2 trial.
Earlier this week, the Department of
They're in the phase 2 trial of that Merck COVID pill.
Safety Administration
That's of the late news that I got from Merck. They are in the phase 2 study trial of it.
And on Monday, we also issued a corrective action order to.
And they're still seeking, you know, to get emergency use authorization, like right away.
Integrity assessment and remedial work plan. Beyond that, Unified Command.
I will say that news can come out anytime before the end of the month, possibly even the next week or two.
We see there are crisis moments, everything is in crisis mode here. But there are other issues that are percolating as well, that some feel at crisis level. Black agenda issues, the Vice President just had the heads of Divine Line in a meeting, right, to direct discussion, we were told, about issues, particularly voting rights. What is the president expecting when it comes to dealing with the Black agenda, particularly with those that have the small window, like voting rights, and also the George Floyd justice and police rights? What is he?
All right, so I want to hear, you know, I think they got all the meat of the, you know, the meat talking points out the way, right? So let me
As you know, and you've told me in the past, the Black agenda is bigger than voting rights and bigger than.
they talking about this Black agenda stuff. Like, I'm definitely finna move on now. 'Cause we know that's a whole bunch of whatever.
He wants to send them into law.
All righty. Enough with all that. Yeah. Moving on. All right. All right, we're back. All right. So yeah, just want to again just kind of cover a couple of talking points. She pretty much discussed, you know, for the most part, dealing with the descriptive value terms of the debt ceiling conversation. As of late, I saw a report that Republicans pretty much have said, you know what, they're not even going to be in the midst of this vote. I was just reading that recently here on Webull, where they're just what was it? I think I posted it too. Pretty sure I did. Where the Republicans are just pretty much getting out the way. Now they're not stopping the filibuster scenario, to my understanding, unless there's some out there that came out that I also missed. But they're just pretty much saying that, yeah, it's still on you guys, the Democrats, to figure out what you're gonna do, because they're trying to force them into using the reconciliation for the debt ceiling raise, as opposed to using it for that infrastructure package. I mean, everybody knows it, of course, but it definitely has them in a bad situation. But again, if they allow the U.S. to default, of course, that smear goes on both, regardless if it's sitting president, whoever that person is, or not. But it still smears on both, right? Republicans and Democrats, regardless, right? Even though they'll try to spin it, say that it doesn't. It's just strictly on the Democrats, but it falls on both of their shoulders, right? So it says, yeah, White House says there has been no formal offer from Republicans on raising the debt limit, right? So that just came out. It says press release that not formal. So it says best option is not to kick the can down the road. Yeah. We know that. But yeah, y'all ain't gonna do nothing. I mean, until the last minute. Right? They're gonna wait till the last minute, try to do something like they always say. Yeah, so this other report that came out recently, I was just reading that lately about, China, China up in the conversation about about what was that? This news just came out too. What was that? Who published that article? Oh, Reuters. That was Reuters that put that out. Let's see. It's a trade advisor Sullivan. No. Let's talk with China. No. Trade plan leaves hungry for nope. I saw something somewhere concerning that, but it may have been, because y'all know China's pretty much all but ready to go to war against Taiwan. They trying to remove Taiwan off its, off its, constant communication with the U.S. because again, y'all know a lot of our products come out of Taiwan, especially when it comes to semiconductors. Y'all know I think 90% of Nike shoes come out of Taiwan, right? So there go all you Air Jordan and Nike fans. Right? If that happens, them prices are gonna go up. U.S. says agreed with China for a virtual Biden X summit before year's end. Blah blah blah. I'm at board to meet again. No, that's not. Principal virtual leaders. No, that's not. It was. I just saw this news article. Man, all right, whatever. I ain't got time for it today. My brain already overworked trading this crazy market today. But made some money though. Made some money. Can't complain there. But still, I was trying to find that article. It just came out. What basically says that China basically talking tough, right? They talking tough. Saying basically that China's top diplomatic Yang Jiechi says Jaichi says confrontation between China and U.S. would cause serious damage to both countries and the world. Right. So China's top diplomat Yang Jiechi says confrontation between China and U.S. would cause serious damage to both the countries and the world. Says China. U.S. agrees to take action to properly manage differences and avoid conflict. That's the headline article. All right. So yeah, y'all can process that one for a second. Sound like China getting tough. right? Sounds like China sound like they about that life. They tired of sitting around and playing second fiddle. They're ready to make a move, right? And U.S. is saying, they want to properly manage the differences to avoid conflict. Y'all know that U.S. don't talk that kind of talk with nobody in the Middle East like that. They talk tough when it comes to, Palestine and Iran and, them little countries like they talk tough to them, right? To the Ayatollah, they talk much trash to him. Afghanistan, but when it comes to China, oh, let's talk about it. Let's be peaceful. Of course, I'm not advocating a war, and don't get it twisted, right? right. But if China's being the aggressor right now in the conversation behind this, that says a lot, because they're all but signaling that they're ready to move on Taiwan, and that's what everybody knows. That's why everybody's kind of like in pins and needles in that region, right? Japan definitely, because they're gonna try to play middleman. Y'all know Japan has a strategic interest to protect Taiwan. Why? Because a lot of these stuff funneled through Taiwan as well, and Japan and Taiwan are major allies to the U.S. because they've been moving factories out of China to Taiwan and Vietnam to manufacture a lot of American goods because of what happened under the tariff scenario with Trump. Remember, Trump was threatening a lot of U.S. companies to move out of China, right? Or if they'll be faced with problems. Well, guess what? A lot of those companies start trying to shift their supply chain warehouses to Taiwan and Vietnam. True story. And so now China like, okay, you want to affect with our money, right? Because that was strategic interest that we had to leverage against America. Then guess what? These people are neighboring cousins, whatever. We're gonna put some fire to them. That'll disrupt your supply chain even more if it get bad. So it's get ugly over there. Even though it may not be, seem like that through the news, but it's getting ugly over there. I mean, China really saying, we about that life, right? And what's going on over Chris? Peace, Power, Profit, TLC in the building, right? Over Chris in the building. So that I was just reading that press release that just came out literally, I think a little bit before the bell, closed. I was just like, man, these people are acting crazy. So yeah, they, U.S. is thinking about releasing more of the emergency oil reserves. Well, we talked about that. They need to go and do that. Stop playing. They need to definitely go ahead and do that. Senator Minority Leader McConnell, right, tweets statements on debt limit crisis linked to that's a lengthy statement. I ain't gonna read all that. My new statement on the Democrat self-created debt limit crisis. Yeah, so yeah, he again, they trying to carry that bill forward on somebody else. Whatever. All right, so I'm definitely not finna go into that. Yeah, so that's about it. No more offer for Republicans raising debt limit. That was the last piece of news that we saw there. So that's it. So yeah, just hey. Yeah, that's probably what he did, Brother Mathis. Yeah, competent pay Senator. He said Mitch McConnell on Wednesday offered a short-term suspension on U.S. debt to avert national default on economic crisis. Yeah, but that's what they're just trying to kick the can down the road. See, that's all about kicking the can down the road, right? To just keep pushing the idea. But again, based upon Janet Yellen, they have until the 18th to come up with something. That's just, it's not a tentative date. It's just a date that they say that, hey, at this point, things gonna look really bad. Now they always have a grace period beyond the hard date that they give. So it's probably gonna be around like the end of the month, right? They have to have it done before the end of the month. But for the fact that paperwork has to get stamped, approved, and all that stuff, and it takes time, for Washington to move because they slow as turtles, right? When it comes to doing stuff like this, right? But they fast when it comes to them getting votes and campaigning for stuff like that, right? These people straight trash, man. Y'all know what it is, but yeah, so that's what that's all about. But yeah, so as of now, that's what got the market fired up. Literally, that's what caused the market to make a hard bounce. When I was talking about, what caused the market to make that hard bounce, it's this optimism, right? It's all this, again, it's the same old, script though, right? It's that, I don't know, lead them to the well. Maybe they might drink, right? But there ain't no well there. It's just the idea that the well may be there, right? That's what they're doing. They're kicking the can down the road. And so every time the markets think that there's going to be, some solace to this, right? Some some culture to it, right? Quote unquote culture. They'll do what? They start to rallying, and the market bounce off that VWAP and 20 moving average, diverges. And again, it didn't look back for the rest of the day because they were like, okay, well, Joe Biden speaking on it live, Mitch McConnell acting like he might want to think about it, but he ain't really gave that concrete. And all that did was just help the market to bounce. Okay? And then at the end of the day, you get to, after 4 o'clock, Republicans like, no, there has been no formal offer from Republicans on raising the debt limit. It's like, so they just playing, politics as usual. Right? Politics as usual. So, that's the game they play. And, they bank on people being, and Moderna has broken through 299. All right, Jeremy. All right, Oba Jeremy. Other match about to get paid. Right? We done broke through 299 or basically 200 on Moderna, down $2.62 after hours, 0.87%. So there goes Moderna. Right. So one contract still paying. I closed the other. All right. So gotta love that. Right. Getting paid. All right. So really quick there, we'll show that then, again, we'll get off in a second here. So Moderna definitely has broken through that 300. Right. You bounced before, rallied off of it, tried to make a desperation plea to the upside and came crashing back down below it. Right. So now resistance sits at 300. Right. It's pseudo, but nonetheless, that's the short-term resistance on Moderna at this point. Now $300. So it's gonna ping back and forth up against it, above it, below it, probably throughout the rest of the after hours, if it don't go ahead and just flush straight down, and that'd be great, right? So that'd be great. But for the most part, Moderna is definitely have taken a beating today. Down substantially here on the day. I want to say around about what is it? They're down about near 10%. Yeah, near 10%. About $32 in terms of total value lost today. Right. So yeah, they definitely got taken to the proverbial woodshed, as one would say. All right. That's it. So yeah, I just want to kind of come on a little bit, speak about that. So as far as the Fed reputation, now Fed reputation is definitely in trouble, right? Yeah, they broke through that 299. You see, so yeah, they didn't broke through. So now again, the Fed's up against, more pressure. I don't know if y'all saw that headline the other day from Elizabeth Warren, where she pretty much just ethered Jerome Powell. Rightfully so, of course, because he definitely deserves it. All right, all that, food-gazing stuff that's been happening inside the Federal Reserve lately with insider trading. Literally, all of his Fed governors and his vice Fed chair guy got caught trading the market off taxpayers' money during the time when they were setting policy. They couldn't make this stuff up. These people are straight trash. And they talking about credibility, they lost that. Right? 'Cause people ain't slow and stupid. Right? There's no way in the world you could justify it at this point. Right? Maybe one, but now 3. And Jerome Powell act like he didn't know about it. And now he's trying to question whether or not it's ethical or not. Like, no, seriously. So Elizabeth Warren pretty much came for his throat. So really quick, let me do this here. Man, it sucks. Yeah. I guess I could do that real quick while I handle a quick little phone call. Let me see. If you guys don't mind, I'm gonna put on our homie. So I'm sure y'all probably saw it recently. But yeah. Let's go over here. Do I have it set for? Man, I so gotta hurry up and get my all this stuff down packed. So when I do, come before you all humbly, I won't be sitting there popping and pinging trying to set all this stuff up. All right, so real tech, it'll set through the thing. So That's the difference between using Zoom and StreamYard. That's the difference. That is definitely the difference. So let's see. Video is set there, set through the speakers. Computer audio, switch the phone. No, I don't want to do that. Microphone will join the meeting. Join audio. All right, so let me see. Maybe it'll work. Maybe right. Maybe it'll work. All right. So guys, real quick, I might need your help for 2 seconds. You all let me know if y'all can hear this without me having to go do all this other stuff. I know I should just jump on StreamYard. Man, slipping lately, slipping. All right. Let me share. Let's see. Get some of get Buddy in here. All right, so all right. That's popping and pinging today. I might need to cut it on in my earphone. That's probably why I need to set. All right, whatever. All right, my bad. Yeah, so let's play a little bit of the Elizabeth Warren versus Jerome Powell, right? So they're doing all the talking points for me today. I don't have to go deep into breaking all this stuff down like I typically would do, because these were some of the topics that I was going to discuss anyway with the title, right? Facebook obviously under fire. Still have to kind of hit that a little bit, but y'all kind of got the gist of that. Debt ceiling debacle, of course, Jim Psaki did that through the a little bit, from a press release and all the headlines that I read about Republicans pushing back, even though they act like they want to work a little bit. That's a whole lot of kicking the can down the road. And then third, of course, the Fed reputation at stake, right? Of course, I don't know if y'all saw the headline yesterday or that press release that Elizabeth Warren did yesterday on CNBC with Sarah Eisen, right? Our homegirl, Sarah Eisen, right? That we did the whole Merck thing on, where they pretty much pressed her about, how she feel about, government officials trade the market as sitting, people who have a fiduciary responsibility to act on the best interests of American people, yet they're trading the market and implementing policy that obviously enrich the stock market, which it basically enriches them, a double standard, basically, right? And yet nothing's getting done to really help the American people with inflation running rapid. Gas prices are through the roof, right? And the feds are sitting there acting like, all this stuff is transitory, and they're just saying that's not our job, it's Congress' job. So they're just getting rich off the back of everybody being, frantic and frustrated about, COVID and everything else while they robbing people. Essentially, I'm paraphrasing, but that's basically what's going on. So she's like super furious with Jerome Powell. She pretty much have all but said that she's not going to re-nominate him for a Fed president or the Fed chair, that he's done a horrible job on his post by not being able to keep an eye on his Fed governors who've been doing all the insider trading. Literally, that's what they've been doing, white collar criminal crime. And just literally the other day, he was forced to kind of implement an independent board to see whether or not those trades that those governors made were, in conjunction or violation of ethics rules. Now, clearly they were. But see, this is a game where they got to play this, we got to go through the process game, right? But yeah, American people don't get that kind of leeway. You don't get the privilege to be investigated before they even want to think about charge you. No, they charge you first, and then they say, well, yeah, you did it, and then we'll see if you didn't do it through court, right? They don't have that. They have immunity from that. These people investigate themselves after they know they've done wrong, and then look at you in the face and act like No, we didn't actually do nothing wrong. This is the nerve of these people. I just for the love of me, I don't get it. But hey, y'all know how this stuff go. This is America, right? That's exactly why I'm an independent operator, and I do things on my terms, best of my ability. Because again, everything surrounding this this mess is just it's garbage, right? You got to be able to make your own money, move on your own, account, and stop falling for all the the trick, the trickery, right? Of this political farce that they present as people trying to do something for your best interest. That's a whole bunch of whatever. Anyway, let me get to this real quick. I got to make a quick little phone call. So I'm gonna play a little bit of this right here. I think y'all gonna get a kick out of this. It's our homeboy, the Maverick, right? We've been using a lot of his sound bites lately. Brother goes in. I think we got to like minds. I pretty much told him that I think we got to like minds. We think a lot alike. He has some interesting visuals in reference to how I've been doing a lot of my visuals. So anyway, this is the Maverick breaking down the Elizabeth Warren versus Jerome Powell. All right. Let's get a little bit of this being footage here. All right. Y'all let me know if y'all can hear it clearly as well, too. All right.
All right. Today is Tuesday, October 5th.
And this is from yesterday's conversation, of course, with Elizabeth Warren.
Folks, apologies for the absence last night. I was in social media jail for daring to apply some critical thinking and questioning our deal leaders' narrative. But our deal leaders at Big Tech, they have our best interest in mind. They told me,
Get used to that, because I stay getting suspended on Facebook while I used to, but since I don't post anymore and share my stuff, they don't mess with me too much. As long as I keep it on my page.
Questioning things, stop it with the critical thinking and what ifs, what about, how come, forget about all of that. Just go on with the program and you'll be fine. And I thought about it for a little while. I was holding on to my rebellious nature. And then the big tech overlords, they turned up the heat big time. They locked my capsule and the chip in my brain started to malfunction. And of course, at that state, I could not hold being locked out of my capsule and I had to fall. And I told them, you know what? I'll do whatever you people want. No problem at all. Specifically because the weather was bad and I could not afford being locked out of my capsule. The weather in Southern California last night, it was utter chaos. With lightning strikes all over the place. These were the good ones, the ones that land right on top of your head. Matter of fact, the man upstairs had great aim last night, scoring over and over and over and over again, hitting palm trees one after the other. So I folded and I said, you know what, please let me back in my capsule. That's all I want right now. And now I'm back. And I got a message for you folks. You gotta listen and obey your big tech overlords. They have your best interest in mind, with exception, of course, of Mark Zucchiniberg. He got some problems. We'll talk about him in a second, but you also have to stop questioning the Fed. Trust your leaders. They have your best interest in mind. Jerome Powell, all what he wants is to create jobs for you bumps, to create common prosperity by making the rich richer. We should trust his judgment, right? When it comes to the V mandates, we should always trust the deal leaders because they have our best interest in mind. And with that message out of the way, in focus tonight, we will talk about what else? The Facebook scandal, the whistleblower scandal, and the impacts on Facebook shares in the market overall. Then we'll talk about Warren versus Powell. And lastly, a revisit to the wall of flooring. Over the weekend, we got the news from 60 Minutes that we have a Facebook whistleblower, and she dropped bombshells all over the place. And by bombshells, I mean shit that we already knew about, but we now have a confirmation of the sadistic, sinister practices going on over at Facebook. Among them, the fact that Facebook's algorithms suggest toxic content intentionally to users. In a nutshell, Facebook wants to instigate and sort of ignite this fire back and forth, toxic debates, toxic arguments between users, and of course the executives. After starting the fight, they sit down with a big bag of popcorn and they watch the show. But perhaps the most troubling revelation is a buildup of the news that we got a few weeks ago, that Instagram in particular is toxic and the algorithms intentionally promoting toxic content to teenagers and children. Of course, this is causing body image issues, depression, etc.
Could potentially have life-altering consequences.
The shocking findings are not surprising to 18-year-old Anastasia Blasova. She says she developed an eating disorder when she was 13. Around the same time, she joined Instagram.
It's obviously extremely difficult when you open up your phone and you see this feed of endless amounts of perfect photos.
The latest reporting also showing Facebook publicly downplayed the ill effects of Instagram on multiple occasions.
Toxic waste to begin with. It is not just toxic to young girls, it is also toxic to young boys and young men. I cannot speak on behalf of women, but I can speak on behalf of men. Because what is Instagram really? It is a soft porn site. That's what it really is, in a nutshell. And therefore, it is toxic waste, it is toxic garbage, and people are better off without it. I go with my Instagram feed, for example, and all I see is silicone all over the place, TNA, right? Fake stuff all over the place. And of course, I know what you're gonna say, but the algorithms are promoting stuff for you that you're already interested in, meaning stuff that you already follow and stuff that you click on. And therefore, Maverick, you got a dirty mind, and Instagram is just following your dirty mind and suggesting more stuff. And I say, I don't even click on that garbage. Trust me, I don't follow any of that stuff on Instagram. I don't even look at it. Believe me, but they still shove it down my throat. And now we have young men, the youth, they got a problem because their expectations are wired differently these days. All of what they see is fake stuff on Instagram, stuff that is not real, probably Photoshop, and they set their expectations to that. And then they get into a real relationship with an actual woman. And all of a sudden, things don't work as expected, shall we say? Right, gents? The plumbing doesn't work, right? The plumbing works when you're looking at Instagram, but magically the plumbing stops working when you have an actual human being laying next to you. Why? Because your brain is programmed, the wires, they're programmed differently now. You get your pleasures digitally, and therefore we see problems with relationships, body image, confidence, etc., etc., etc. So once again, Facebook, Instagram, toxic garbage for both men and women. But the other side of this story is why Facebook? Why now? Why are we hearing all of this right now about Facebook? Because all of them are toxic, including Twitter, YouTube, and the rest. TikTok specifically is extremely toxic. Of course, I'm not denying the information, the validity of the information. It sounds detailed and truthful. We already know that. But the problem is, once again, why Facebook and why now? Of course, the whistleblower says she joined Facebook after one of her friends or relatives harmed herself due to conspiracy theories she got from Facebook. Really? I wasn't born yesterday, folks. And the buzzwords, the program testimony, it's all obvious here. We know what's going on. They're all bad, yet they're targeting and singling out Facebook for obvious reasons. Reasons that we already know. They blame Facebook for meddling into the E word, right? You can't even say that one. And we could have had a different president absent of Facebook's propaganda. Regardless of what you think about that, the reality is they're pushing for Facebook to be sterilized. What does that mean? It means Facebook evolving into becoming YouTube, for example. YouTube followed the rules. They criticized YouTube over and over and over and over again. And what has YouTube become now? Pretty much a DVR service for cable companies, cable news in particular. NBC, CBS, Fox, CNN, they shove it down your throat. You don't have another choice. Meanwhile, the algos don't promote independent creators, specifically creators who dare to challenge the narrative. Similar story with Twitter. Twitter has the check marks, approved sources, and you are not an approved source unless you come out of New York Times, Washington Post, etc., etc. And the goal here is for Facebook to promote news from verified and approved sources and have the algorithms promoting that kind of stuff and not news, articles, or discussions from non-approved, non-verified sources. The stock is down big, at least it was, over 5% yesterday. And on top of that, by the way, we got the outage, a massive outage. And we have a lot of theories of what happened there. I'm not going to go into it, but you can find these theories in other places. Suit yourself. But at the end of the day here, how would this piece of news impact Facebook as a company, as a stock, and the future of Mark Zuckerberg as a CEO? My hunch is This stock, this company, this CEO have been Teflon against all of the criticism and all of the problems they faced in the past. And the reason is Facebook as a company continues to deliver like no other company its size. The growth is massive. For example, when you look at the revenue growth for Facebook, double digits growth year over year over year. No other company this size deliver this kind of results. Double digit growth in revenue year after year after year. Likewise, when we look at net income, massive growth consistently year over year. When it comes to EBITDA, similar story. Growth year over year consistently. And money speaks the loudest. The company, the CEO continues to deliver. The customer, the consumer, continues to use Facebook and Instagram. Small businesses across the country use Facebook. And therefore, while the allegations are extremely harmful to Facebook, I don't believe that they will change anything here. If anything, investors and traders will speak and they will continue to buy the dips on Facebook. It is a company that delivers growth like no other company. Love him or hate him, Zuckerberg continues to deliver for his investors until and unless this story changes, Zuckerberg is here to stay. We might have some changes here and there in Facebook as a platform regarding the algorithms, but at the end of the day, nothing will fundamentally change in Facebook. Investors love the stock, and they will continue to love the stock regardless of these allegations. This is the truth and the reality. And by the way, how come Twitter is not under scrutiny? How come YouTube is not under scrutiny? How come TikTok is not under scrutiny? How come Tesla is not under scrutiny? Today we got the news. You want to talk about toxic culture? Here it is. Tesla to face R-word allegations from black worker in open court. Owen Diaz alleges that his co-workers at Tesla factory in California told him to go back to Africa and called him R-word epithets. And of course, the culties must be proud because this is a reflection of their culture. Nobody's more toxic, nobody, than the Tesla culties. You know, the AMC apes, the Robin Hoodies and the likes, we can deal with those. They're actually nice. They're just too enthusiastic. But the Tesla culties are a different breed. They're nasty, they're arrogant, and they are discriminatory and abusive. They're the worst out there. For example, we have analysts, and one of the few Tesla bears, by the way, not a lot of them out there, Gordon Johnson, and they attacked this guy viciously, and they called him all kind of R-word, discriminatory stuff over and over and over again. Is Congress, the Senate, or even the media about to question the toxic culture over at Tesla? Of course not. But you know who's questioning things, by the way, specifically when it comes to the Fed? It is Senator Elizabeth Warren. And she now doubled down on Papa Jerome Powell. She's hitting him jabs, uppercuts, left, right. And now she's flat out calling for the replacement of Jerome Powell, Mr. Dangerous. Because we now know, speaking of toxic culture, it is not only in Facebook and Tesla. That's nothing. You want to see toxic culture? Go to the Fed. Because we now know that pretty much all Fed presidents traded stocks and bonds on insider information. We have Barkin, the Richmond Fed president, whose skeletons are now coming out of the closet. Likewise, we also learned that Fed Vice President Clarida also traded millions and millions of dollars in bonds and stocks while he was pumping these assets higher via the cocaine operation.
As the sitting chair of the Federal Reserve, the responsibility to safeguard the integrity of the Federal Reserve rests squarely with him. Setting the right culture at the Fed and making sure safeguards are in place to prevent self-dealing and to protect the public's confidence should be the minimum standard any Federal Reserve chair should meet. And once there is a problem, a quick and aggressive response is critical. Chair Powell has failed at both tasks. Last week, I said that I would not support Chair Powell's renomination because in one decision after another, he has consistently failed to serve as an effective financial regulator. But that is not his only failure. Chair Powell has also failed as a leader. Our nation needs leaders who are willing to set aside and enforce strong ethics standards and who act swiftly when a problem arises. Our nation does not need a go-along to get along leader who doesn't know or doesn't care when, on his watch, people with great responsibility advance their own interests over the interests of our nation, or someone who drags his feet in dealing with problems that shake the public's confidence in the institution he leads. We need changes at the Fed.
And here are the latest betting odds. And as you can see, Papa Jerome not doing so hot so. He's dropping like a rock. And so is Brain Dead. They're dropping in the odds. And who's rising, by the way? My pick, I got $20 on him. Raphael Boystick of the Atlanta Fed. Remember this name? Remember this face, because he will be the next Fed chairman. But hold your horses here, because perhaps you want to buy the dip, not in the stock market, but of Jerome Powell. Because right after the remarks from Liz Warren, President Biden came out and said that he has full confidence of Jerome Powell, meaning the likelihood is he will renew his tenure. But what Biden doesn't understand, perhaps he's too dumb to understand that Jerome Powell is his biggest enemy. Why? Because when this inflation disaster finally blows up the stock market and the economy, who's going to get the blame? Is it going to be Jerome Powell? Of course not. The majority of the public will blame Biden, and the Democrats will suffer a massive loss in the upcoming midterm elections. Why? Because if you go down the street with a picture of Jerome Powell, ask about 10 people, random people, who is this guy? I would say 2 out of 10 will recognize him. One of those 2 will say, yeah, that's the guy from the memes, right? But that's about it. The public doesn't even know who Jerome Powell is. The majority of the public doesn't even understand or know what the Federal Reserve is. But the majority of the public know who the president is. And they know that you place the blame on the president and the economy takes a U-turn. This is exactly what's going to happen. Joe Biden will be blamed for the inflation crisis and the market crash and the economic disaster that will follow. Let's move on to the wall of worry, and let's see if we're making progress here. Of course, remember, I gave you 3 conditions for a legitimate market bottom and not just another dead cat bounce. Number 1, we need a top in the dollar. Number 2, we need a top in yields. And number 3, we need to climb the wall of worry. So let's see if we have progress here. We already talked about Jerome Powell and the future of the Fed chairman. What about tapering? Tapering is becoming more urgent and imminent, by the way. And the reason is inflation continues to rise out of control. Matter of fact, the media now is liberally using the word stagflation, which was banned before. We got hit. This channel got hit before because we used the word stagflation. And now every media outlet is using the word stagflation. Likewise, we have Fed President from St. Louis, Bullard, who came out with a hawkish stance yesterday, not just suggesting that we should taper, but perhaps we should raise interest rates sooner than the forecast the Fed gave us. Now, I don't know if Bullard is also trading stocks and bonds. He probably is. At this point, this is a toxic culture with criminals running loose. But Bullard is now adding more pressure on the Fed to start tapering, perhaps raising interest rates abruptly. And the facts don't lie here. For example, rents are increasing out of whack. We have a surge of over 20%, which is making low-income families, regular families, priced out of the market, both the housing market and the rental market now. And as I told you, by the way, I know what you guys said. Bro, wait till the evictions moratorium expires and the supply will come to the market and rents will go down and there you go, inflation will cool. It is transitory. I told you this is not going to happen. What's going to happen after the eviction moratorium expires, landlords will kick tenants out and they will rent the units for the market price, which is 20, 30, in certain cases, 50% higher. And therefore, if anything, the evictions moratorium, the expiration of the evictions moratorium will actually be bullish for rent prices to go higher. And this is exactly what we're seeing right now. And we know that shelter cost is a large component of the CPI and other inflation measures. So if rent prices continue to rise higher, you bet that inflation data will come out hotter and hotter. You also have a massive trade deficit now. This country exports nothing. We're importing everything. We're reliant on imports. We have the holiday season, the hottest shopping season. Where are the goods? The goods are stuck at the ports, the factories. They're not being shipped. We have a labor shortage. We have truckers shortage. We have closure of ports. That will lead to prices rising higher and higher and higher. And of course, the epicenter of the inflation crisis right now is becoming natural gas. We are seeing a massive short squeeze here, and natural gas prices are surging like you have never seen before. 10% gains on the New York market today, and 20% gains in a single day over in London. With natural gas prices rising higher, with crude oil prices rising higher, with heating oil prices surging higher, this is about to be one expensive winter for the consumer. Who do you think they will blame for the massive bill they're about to receive? The answer is the president. They're not going to blame Jerome Powell. And therefore, I say that the biggest risk for this administration right now is the censure of the reckless Fed Chairman Jerome Powell. Inflation is surging higher across the globe. We talked about the Russian, the Czech Republic banks raising rates, and now we have the South African Central Bank hiking up rates. The problem is that the inflation crisis will continue to hit this country hard, meaning South Africa, so long as the Fed continues to print money out of thin air, refusing to taper. And here's for you, pay attention now, to raise interest rates. Here's what's going to happen. The Fed will taper, and you will see right away that the moment the Fed tapers, the stock market crashes. But inflation is not going to go away. Inflation will be sticky, and the Fed will come to a conclusion that tapering alone is not enough. They have to start jacking up rates higher. Abruptly, of course. Do you think the market and the economy will like higher rates? Think again. And perhaps the most important information that we got in the morning is from the ISM Manufacturing and Services PMIs. When it comes to manufacturing, respond and sustain, and you can pause this and read it for yourself, by the way. It is a consistent theme. The prices of electronics, the prices of semiconductors, the supply chain issues, the labor shortage, energy prices out of whack, the fact that goods are stuck in ports, the logistics nightmare, the shortage in truckers, et cetera, et cetera, et cetera. When we look at the numbers for manufacturing, the activities are now picking up higher again, meaning we're moving from this stagflationary period, which was due to the rise in the D cases went higher, and therefore the D put a lot of pressure on growth in the economy, but it put minimal pressure on prices. This is the problem. So now that the D is cooling down for now, at least, what is going on? Prices are recovering, and so is growth. The problem is the impact of the D was more severe on growth, not on prices. So when both of them start to climb higher again, there's a gap between growth and prices. So this stagflationary period will extend, and perhaps it will morph into something bigger, a larger stagflationary crisis due to the gap between growth and prices. For example, when we look at the manufacturing PMI, production is growing higher, new orders growing, employment also growing, inventories growing. But when it comes to customer inventories, they're actually down. They're too low. What does that mean? It means these producers will have to ramp up production in the next few months. The problem is to ramp up production, you need supplies, you need labor, you need materials. All of these are not available now. We have shortages all over the place. What does that mean? Producers are going to have to jack up prices even higher. The survey for September, to begin with, already indicating that prices are rising higher at a faster pace. So prices will continue to rise higher and higher and higher. When we look at commodities up in price, we have products like aluminum, copper, logistics, energy prices, and therefore I continue to say, in this market, the safest place to be is the bullet stocks, meaning aluminum, copper. Nothing will go through without these kind of stocks. Even energy stocks are becoming bullet stocks now. It doesn't matter for these producers. They command massive pricing power. You have no choice but to buy aluminum if you want to ramp up production. What does that mean? Aluminum prices will continue to rise higher. This will be good for aluminum stocks. When it comes to commodities down in price, we can celebrate, we can pop the champagne, right? We have lumber down and steel, scrap wood. You see, we told you it's going to be transitory. The problem is we have commodities short in supply, including aluminum, including steel, including electrical components and semiconductors, all in shortages right now. What about the picture for the services sector of the economy? It is a similar theme here. We have shortages in semiconductors. We have problems with logistics and supply chains, transportation bottlenecks. The demand is higher than the supply. We have mass shortages across the services sector of the economy. And as you can see here, when we talk about production, when we talk about new orders, when we talk about the backlogs, all rising higher, but inventories are down and prices continue to rise higher and higher and higher. Again, they're gonna have to ramp up here and catch up with the demand. That requires more labor, that requires more spending, more supplies, which means absent of having that, if we still have scarcity in labor and supplies, the other option is jacking up prices higher. So prices will continue to go higher and higher and higher, and the inflation crisis will become worse and worse and worse. When it comes to commodities up in price, according to the services sector of the economy, we have food and beverage, we have beef, bacon, chicken, copper, aluminum, all of these are in short supply. But rest assured, we're making progress here. Inflation is transitory. First, look at lumber, look at rental cars. Yay, they're down. The problem is the commodities in short supply. We have medical kits short in supply. We have electronics, laptops, computers, heating devices, all short in supply. What does that mean? Either the supply will ramp up faster. You're going to have ports reopening, the labor shortage magically being resolved. Otherwise, prices will continue to go higher and higher and higher. And now we have warnings even from the good professor, Professor Spiegel, over at the Wharton School of Business, who's known to be a Wall Street propagandist, but even the good professor is now saying that inflation is getting out of whack. It will be a problem for the economy and the market, by the way. Next, what about China? Perhaps we're doing some progress here with China. The answer is not so hot so. We have bad news. For example, we have the new China policy, which, by the way, doesn't remove the tariffs. This is about to grow and become a new concern for the market. The potential for the revival of the trade war between the United States and China, because China did not live their promises and expectations from the trade deal. They're not importing goods from the U.S. And of course, they will use the COVID-19 crisis as an excuse to say, hey, we had an emergency, we could not keep up with the trade deal, yada, yada, yada. But China has bigger problems here because their economy is falling apart. If their economy falls apart, then they're not going to import goods from us anyways. We have a massive trade deficit climbing to a record $73.3 billion. Why? Because the demand U.S. consumers continue to surge higher and higher and higher, but the supplies are nowhere to be found. The contrast between the American and the Chinese consumer is extremely important. On one hand, the American consumer is enjoying the free cash, the cocaine operation, stimmies all over the place. Therefore, the demand is climbing higher. The Chinese consumer is suffering stock market losses and perhaps more austerity measures. At some point, the U.S. consumer will be dragged down by the weakness in the Chinese economy and the Chinese consumer. Never mind the energy crisis over in China. Yes, they're scoring sweetheart deals with Middle Eastern countries, but the problem is the rise in commodity prices is killing China. They tried over and over and over again to manipulate the market, the commodities market, but the power of this inflation is overwhelming China. So long as the Fed continues to print money out of thin air and interest rates continue to be accommodative, money has to find somewhere to hide. Stock market valuations are sky high. The bond market is in a massive bubble. Where else are you going to go? The answer is commodities. And of course, what about the risk regarding Taiwan? China continues to fly planes, more planes, over Taiwanese airspace. This happened over the weekend. It happened on Monday, and who knows what's going on here? Is China casing Taiwan for perhaps an upcoming invasion? That's another disaster scenario that the market has to price in. What about the Evergrande crisis? We know that Evergrande is now missing payments, and we have other Chinese real estate developers also missing payments. So this is a contagious disaster across the entirety of the real estate sector in China. Luxury real estate developer Fantasia failed to make $206 million bond payment on Monday. And now we have talks that perhaps pieces of Evergrande will be taken over by other companies, and shares of Evergrande were halted on Monday. To my knowledge, they're still halted, so perhaps there is a deal upcoming here. We don't know the details or how the market will react to such a deal. What we know for sure is the Evergrande crisis is getting worse. It is becoming more contagious. They continue to say this is not Lehman, but how do you know? How do you know what's hiding in the details? We're not going to know until the shoe drops. Remember what I said. I said the Fed and central banks across the world know that we have a massive stash of risk here. And if this stash light up on fire, we will have the biggest economic crash and the biggest market crash in history. And therefore, the Fed and their allies are using the repo facilities, the vacuum machine, to reduce the stash of risk. On top of that, they will conduct controlled fires by tapering here and there to reduce the amount of stash. That is the risk. The problem is, what if there is an accelerator hiding in this massive stash of risk? And when the Fed starts a controlled fire by tapering, this accelerator will light up a fire and the whole stash will burn. What is the accelerator? Perhaps it is hiding in the Evergrande crisis. And when the you-know-what hits the fan, then we will know who's going to hold the bag. And it will be surprising to all. We talked about all the bad news coming out of China. But what about the good news? Yes, I got them for you. Yes, we got good news from China, finally. A video shows female Evergrande staff dancing to entertain clients at one of the company's property showrooms. So the bad news is, you lost $3 million, but hey, the show was worth it, right? Look at these ladies dancing. It was a good show. Come on, stop it with the fun already. Next, what about the debt crisis? What's going on here? Here's what's going on. In the morning, we got Senator Joe Manchin coming out and saying, you know what? I'm folding. I will go to 1.9 trillion. I told you, this guy's going to fall. Perhaps the Democrats haven't learned how to deal with Manchin, even though he's been in politics since before you and I were born, which is he plays tough. He barks and yells. And then at the 11th hour, you approach Senator Manchin with a checkbook and you say, how much? Senator Manchin, how much? Give me a number. He'll give you the number, you write the check, it's over. He'll agree on whatever you want him to do. But the problem doesn't stop here with Manchin and Bernie and all these people. Because at the end of the day, you need the approval from the GOP, meaning Mitch McConnell. And Mitch McConnell in the morning lived up to his name and he started stroking Biden's ego, saying good things about Biden, how they worked together in the past, and he's my friend. The problem is Biden responded by shitting on McConnell and calling him and his party dangerous. So much for ass kissing McConnell. Didn't work out. And by the way, back to the wall of worry, what about the Biden administration? Nothing new here, perhaps the potential of a revival of the trade war between the US and China. But when you ask respondents in surveys, what do you think about the direction of the country under Joe Biden? Even Democrats are now dropping like a rock. And they're saying not the right direction. Why? Because inflation continues to rise out of control, whether Democrat or Republican. You're paying more for gas, you're paying more for meat, you're paying more for rent, you're paying more for diapers, and pretty soon you're going to pay more for underwear. Because cotton prices are exploding higher. What about the V, the D, this E, whatever it is, the thing? When it comes to the thing, we have progress. We have the pill for Merck. We have new testing kits at home, easy testing kits, cheap, affordable. But we're getting closer and closer and closer. The end of the tunnel, the light at the end of the tunnel. Is this good news or bad news? Certainly good news, but what does that mean for the stock market? It's bad news. Why? Because good news when it comes to the thing is bad news for the stock market because it reduces the need for the cloak from the Fed. Less cloak means the market goes down. End of story. And what about the risk for margin calls and the black swan? That comes later. Anyhow, folks, this might have been a long slew of information, but we haven't even started. And we're running out of time. So let's move on to the market's performance today. And here we go. The Nasdaq closing in the green by 311.75 points, or a gain of 0.92%. The Nasdaq closing in the green by 178.3.
Where are we? All right. Like I said. Okay, yeah, we back. All right. Yeah, so yeah, that's pretty much that. Straightforward. All the notable talking points or pieces of information I think that you guys can definitely take something away from that. Of course, a lot of stuff we discuss on here a lot anyway. Sometimes it becomes, it's good to hear from different perspectives. But for the most part, it just shows that you guys are thinking rational, right? You're on the right side of information, as we are paid to be able to dissect information in a way where, if we're going to take an investment decision based on that, make sure that is reputable and is credible and is also actionable intel. Surrounding the broader market, surrounding individual companies, you know, i.e. all the moving parts that make up our craft or industry what it is. So that's what we're looking at, you know, going forward here. We got 2 days to you know, drum up some kind of level of camaraderie around the broader markets, or this is just another stopping point along the way for the markets to try to stay, you know, treading water best they can before, you know, they shut the lights off, right? Literally, be it debt ceiling or you know, the idea of the tapering talk really just overshadows the you know, would-be energy of the broader markets being able to rally any higher at this point. Of course, the all-time high still seems to be, you know, it's out of reach, right? It's out of reach of a lot of the bullish, you know, traders, I don't know, grasp, so to speak. But for the most part, you know, we're dealing with, you know, a lot of what ifs, right? It's a lot of what if energy still surrounding the market. So I'm gonna cut my cam back on. Again, yeah, still trying to, you know, dodge this COVID, right? Y'all might have some of that COVID. I was cutting up a little bit. So that's where we at, guys. So until those things change, we are subjected to, you know, any information coming from the feds that may seem to be even more hawkish that we haven't been getting from these little, you know, off the beaten path governors. What else? The Evergrande situation seems to be playing itself out now, so not worried about that. What else? Blah, 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 blah. Those are the two most pressing things, right? Debt ceiling, Evergrande. China's, you know, back and forth with the USS, whatever at this point. Commodity prices, yeah, we get that. That's going to, you know, possibly come to a head if we hear more about the idea of their tapering markets. So, you know, yeah, we are in that sweet spot again. So really quick here, we'll do this here before I get ready to get off here. Let's run over to the charts really quick and see if we can spot anything particular. Blah, 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 blah. Where we at? Let's shoot over here really quick. Okay. So, of course, going to the, this is the hourly chart. So we'll start with the hourly chart first, right? Just on GP. Hourly chart still puts us, again, we're just making up more lower highs. Like I've been saying, you know, since we fell from, you know, quote unquote grace up here, we just been making lower highs all the way down. I mean, look at the chart, still in the bear flag. That's still a bear flag. Either way you look at it, even though these bounces be wicked like this here, you got these candles like these guys here. That was an abnormal candle there, right? This one here today, abnormal. This guy right here, abnormal, right? So that candle and this candle, abnormal. This candle just made sense because it was at a support. So of course they was going to juice that. But this is right here early in the morning, candle like that there, abnormal. This here happened latter part of the day somewhat, abnormal, right? You're talking, you know, after the 1 o'clock time frame, you have a candle like this, abnormal, right? So that's them trying to tread water. Again, the markets are treading water, and what it's starting to do, well, what it's trying to do, I should say that, excuse me, it's trying to do this right here. I'm pretty sure y'all see it, right? I'm pretty sure y'all see that there, right? Matter of fact, let me draw it tighter. Yeah, not that it really matter, but even though that, you know, just for the sake of trying to make it seem, you know, more realistic to a degree. All right, you see what they're trying to do, right? They're trying to give it hope, right? Give it hope, because if not, you know, your next, well, the obvious lower high sits at what? 435. No, actually not 435, but right around 436.13-ish, 436 even. Let's say that just 436. Obviously, we know that. So we'll just say 436, obviously. You know, that's your hard line resistance, right? 436 is hard line resistance. Hard line resistance, right? All this right here, 436 hard line resistance. Previous before that, you know, that resistance right there before it could break out and go higher, hard line resistance, right? So, and we probably go back further and see it more over there as well. So every attempt to get close, you know, 435, getting close to that, obviously it has to deal with 435 first. But if you can, you know, kind of trend up inside of 435 potentially tomorrow, potentially, right? Give or take, you can try to build some support there right before you get a next little launch up and test that 436 potentially, right? And that would be your obviously what? Your cup and handle, right? Cup and handle pattern, right? But that's essentially what that's all you got for it, technically. And you put that on the hourly chart. Now, if you deduce that to the daily, of course, it's going to look a little bit more, right? It's going to look a little bit more, you know, rigid, so to speak, right? It's not going to look so fine if you would get on the hourly chart, but it still conveys the same thing, right? You got a 20-day moving average sitting at 437, 70-ish, 60-ish area right there, which obviously correlates with this, you know, this candle here, maybe some candles back over there, of course, obviously. But outside of that, the market's still trying to make that U-shaped bottom here. It's trying to build a support. It's trying, right? Pull a little tink, right? They're just trying to slam the brakes on it, kind of breaking any lower than, you know, of course, going back down to this point here around that 427 area, breaking that, then easily 436 flush down to maybe 423 gap closure. For that short-term gap closure is 423 and change, right? So all those things are still on the table. Excuse me, pull this mic over here. So all those things are still on the table. But for now, this daily chart, look at me, this daily candle. Look at this daily candle. That is just horrendous. I mean, keep in mind, guys, we were down about 1.3% in the pre-market. 1.3% we were down. Indeed, greedy behind people rallied this thing all the way back and closed up about, what, 0.5%, 0.47% on the day. And again, ask yourself, what was the cause of that level of what? Bullish aggression. No more than what we know. The Republicans played, you know, kickball today, dodgeball. Biden tried to fuel it even more with his speech today. Again, tricking the algos, getting the algos fired up, and bringing people who were sitting on the sideline like, man, no, you know, this is a dip opportunity. The dip, you know, by the dip coach is still alive. They beaten up, you know, they're weary, but they still alive. Even though they know their man, Jerome Powell, is, you know, pretty much in trouble on his way out the door. Right? But that's just, you know, that's how this stuff, you know, shakes out at the end of the day. So for now, again, going back to the hourly chart here really quick. But now, you know, that's what we have to deal with. That's what we have to, you know, trade around. That's what we have to, you know, scalp around. Of course, this is strictly speaking to the trader right now. That's what you have to scalp around at this point if you're going to look to play any of these pivots. So, I mean, for the most part, I've been nailing these jokers. I've been crushing the spy, right? But again, I still see the, you know, I see the inevitable. You know, I'm not going to act like I don't see it. Right? I'm sure y'all see it too. Them lower highs, right? Right. All those little lower highs, right? That you can pretty much take to the bank, right? Even this guy right here, you know, ever so slightly, but it's a lower high until they can breach it. Right. So the bulls keep expending all their resources to keep the market from falling, but they can't necessarily break out of some of these, you know, major level of resistance points. All you're doing is kind of, you know, playing the over under, you know, going lower, you know, bouncing and going lower, right? You're not necessarily really producing any kind of, you know, sentiment that says that we're back. Of course, the 20 moving average on the hourly chart sits at 438.89, right? You know, that's definitely, you know, at around this area here, those guys there, right? You'll pick those guys up. Of course, if you're able to do that, you know, part of this calendar right here, of course, you know, if you could take those guys, you know, take those guys out, part the short sellers up there. But if not, you still kind of battling the bear flag here, right? That's just you know, that's just the facts. You're battling the bear flag, excuse me. right? So tomorrow you may get a, we'll see how the future market act up tonight. You may get a little bounce, but this might be more to what we've been watching, where you had that, kind of rally, V-shaped rally off the bottom, only to run into some level of resistance and kind of stall out there and potentially break and go lower, because there is no true confirmation coming out of the White House that you're going to have some kind of level of, I don't know, wind at your back, that we may be getting closer. And now we got a postponement from the senators on the Republican side. That's pretty much all but saying, hey, we, not tonight, definitely, because I know the Democrats want to hold a vote tonight. That's not going to happen. All right, unless special session get called and something happened just out the blue, that the Republicans just say, you know what, we're gonna start filibustering, y'all go forward with your little vote, right? But we know, I just hard pressed to see that happening at this point, because that's still leverage for the for Republicans, right? They need that for leverage to keep the Democrats scared and thinking about using reconciliation, right? So that way that messes up their whole plan for the infrastructure bill later down the road. Right. But yeah, so there you go, guys. I mean, for the most part, really quick here on the way out the door here. If I had to kind of also do this as well, I'll do it from this perspective so you guys can, draw your own conclusions. But if you don't want to say this, we'll just say that there. All right. Y'all tell me what y'all see when I do this right here. What is that, guys? What do y'all see with that right there? Anybody? Everybody? Right. What do y'all see right there? Let me get y'all feedback on the YouTube side of the house. What do y'all see right there at this juncture right here? Anybody want to comment on what y'all see right there? What is that right there? Anybody? What's over here? Resistance always time. Yeah, you're right. Over dollar will. Yeah, we're playing again. They playing they're playing some good defense. That's all I'm gonna say right now. Market makers, hedge funds, banks, feds, everybody. Again, you had a $1.4 trillion reverse repo operation auction today. Again, we had the biggest in history. What, about a week ago at 1.6 trillion? They only backed that off by what, I don't know, maybe what 200 billion. Now we're sitting at about 1.4 billion. 1.4 trillion in the repo operation that came out today. Obviously, all of that was attributed to what you see in these two candles here. That auction started at 12:45, and it apparently closed at 1:15. So apparently, a lot of that cash was already starting to infuse itself into the market. Right, those banks that got hold of that money, those counterparties that took hold of some of that money from the feds, they liquidated some scenarios and they started buying assets. And slowly but surely, you had these candles like this right here, strictly based on that reverse repo operation. I mean, I sat there and saw it. When I saw it, I was like, yeah, I know what's going on here. Right? I was just like, boy, these people here ain't got no shame in their game. Boy, these people here, boy, America so far fraudulent, right? But anyway, yeah. So what do y'all see? Somebody says what? Okay, Brother Matt said head and shoulders. Brother Dollar Will said reverse head and shoulders. Inverse, right? Brother Brandon, inverse head and shoulders. So the answer is inverse. Clearly, right? So yeah, that's what it is. So yeah, you had it right over Matthew, but you forgot to add that pre-selection to that, right? It's inverse or it's a reverse head and shoulders. And anytime you say reverse head and shoulders, is that bullish or bearish? What is a reverse head and shoulders? Bullish or bearish? Right? Inverse or a reverse head and shoulders is bullish or bearish. Of course, I know y'all veterans. Most of y'all veterans already know that, but we do have a lot of new people that's learning. So we always want to give everybody that benefit to politic their way through becoming more sound and strong in their confirmation. When they see things, they'll know how to call it. All right. But inverse head and shoulders or reverse head and shoulders, is that bullish or is that bearish? You guys let me know. All right. I'm sitting there in the dark. I need to cut this old green screen off for this. There we go. Bullish or bearish? Right, over Chris says bullish. All right, so we got a bullish. All right, going once, going twice, going once, twice. All right, so it is definitely a bullish pattern. Now, in volatile marketplaces, it can go either way. This is a definitive sign being made, but it's a tight one though. Notice that this is a very tight head and shoulder scenario here, but we do have a neckline, right? We can honestly say at this point, we do have a neckline, right? Again, regardless of it being what it is or not, it's hitting that point of resistance and just backing off of it. So we can clearly say and clearly see that we do actually have a neckline, right? Right. And we'll put it right about we'll put it right about there. Right. If we put it about there, you would take the length, obviously, from the head to the neck. In this case, we'll go from here to here. Take that line, and you will put it somewhere over here. Of course, we'll just say, for the sake of the next day, right? Since it's the hourly chart. Not that it can happen tomorrow. Could happen Friday. That's even if it does happen. This is all speculative. Of course, it's not investment advice. It's just opinion based on technical analysis. You would take the length of that, and it would come out. You would equate that to the equivalence of what it would be on a breakup to the upside if it was a true honored inverse head and shoulder. Keep in mind, it has to be honored. Just because you see it don't necessarily mean it will still happen, because we are what? We are in a very enigmatic market, because we are in a volatile marketplace that's hanging a lot of its headlines, or its movement, I should say, on headlines coming out of what? White House and press releases, right? Federal government, stuff like that. But in a normal marketplace, yeah, that would be something to be somewhere at least 80 to 90% respect that you might get a move to the upside on this. But we shall see. But if not, if that's the case, that's about a what? That's about what? 426, 435, or 430, yeah, about 435. We'll say that. So we're about a 9-point move, right? We'll say 9 to 10-point move. Either way you look at it, about 9-10-point move. All right. So that puts us at or around $442, which is, it makes sense, because around 442, what do you see? You see these guys right here, right? You see those guys right there, right? So let me do this real quick. Those guys right here. Your man's right here, right? Right around that 200 moving average line, literally almost straight lined it too, right? At that point, they're all the way across, right? So that becomes the resistance. If you get that pop, if you lucky to get it, I should say lucky, right? Then yeah, you may run up into run towards that point there and hit the resistance there. If it breaks through it, then you can talk a little trash, because now you get a chance to contend back to these guys over here, right? Those guys that have been sitting for them to come get bailed out, right? They still sitting up there for those people, bullets on the market, they're waiting to get bailed out up here. That's that point of resistance, because clearly you see right there, 442 straight line is the bottom of our channel band that we drew back here way back a week ago, about 2 weeks ago, actually, somewhere around there, right? So I mean, yeah, it all makes sense when you begin to map stuff out. You gotta, that's what I say, you gotta play with charts, guys. You got to get some chart time in. They say you ain't made it till you go over 10,000 charts. This is what it takes. You have to go through stuff, make it make sense. Eventually you'll start beginning to see the market's a little different. It's going to begin to open itself, reveal itself to you. The oyster of it, it's going to reveal itself to you. And you can somewhat start thinking just like these algos and these, these institutions and hedge funds, the people, how they might be looking at it, right? You kind of see what they might be goaling for, right? So to speak. Right. So, but yeah, that's what we're looking at there. So if we get that move there to 442, it makes sense, because it puts it up at around that point where resistance sits at the bottom of this line here, the channel band, the 200 moving average kind of up there at that point of 200 moving average, and a lot of resistance chop at around that point there from traders sitting up there at that point, right, waiting to get bailed out, because since then they just been downhill slalom from that point, right. So, that's where we at, guys. So we'll see, what comes from the next day or two, right? If this even plausible, right? If this even plausible, I mean, this inverse head and shoulders, but clearly y'all see it. I'm not making that up, and I'm not, reaching, as they say, you just reaching. Now I ain't reaching. That's basically what you see there. That's based about that's a good inverse head and shoulders there, right? It's tighter, because I have it, squinched down, but that's basically what you see right there, right? So until the markets shake us out of that. I mean, if I spread it out a little bit, maybe it look a little bit more defined there. Let me see, clear the drawings. I mean, either way you look at it, yeah, you got round here, top here, another shoulder here, neckline clear as day right there. Length of the head to the neckline, that's your 8, 9 points, 9, 10 points, whatever. You take that as the resistance, at that point and stretch it to the top side. That's how you gonna look at that. A little bit over 442. Today, tomorrow, next week, if not, I see you back down to the downside. Because ultimately, the trend is still to the downside. The bear flag is still intact. They fighting, but it's still intact. Right. So yeah, so just out of transparency here again, I bought 2 calls inside the 4 to 415 time frame future scenario of the SPY. I'm just trading it, again, if they have any momentum, this is going to be a stretch because these are pretty much lotto call buys, right? These are strictly lotto call buys. Granted, these are lotto call buys. I'm going to be the first to tell you, right? Because the futures market do not care about your calls or your puts. If it's going to have any weakness, when information may be coming out of China, anywhere Nikkei, the Nikkei got wrecked last night, right? The Nikkei, the Japanese market got wrecked last night, right? Which also brought a lot more, pressure down on American markets, and also on top of the Hang Seng when they opened up. So it was just a recipe for the disaster. But nonetheless, that's what we're dealing with, guys. That's what we're dealing with here, right? So we're doing our best to stay immune, immune safe and not, immune compromised. So of course, I got the COVID mask on for a reason, right? I'm immune to these charts acting up. That's what the whole thing about, right? I'm immune to the charts, right? I got my protection on, right? These markets are spewing all kind of, viruses and bacteria trying to, trap these traders. But, I've been fortunate. We beating the brakes off the market. The puts paid well today until I had to bounce. And then after that, my Moderna puts, they finished the rest of the day out, strong. Matter of fact, of course, until the close, which y'all saw, right? And I closed one of them off and left one of them to work for tomorrow. So, again, about $1,100 a day, nonetheless, grateful for that. $1,100 go a long way, right? 2 days worth of trading falls my limit, my minimum, of course, $500 a day. All right, so can't complain there. All right, so we'll see what happens tomorrow. That's just, my opinion on the market at this point. We know there's a lot of pressing issues surrounding it. Broader market still looks in shambles in terms of downside, placement, but they are trying to make a gallant effort to keep the markets off the lows, right? This 428, 427 area. We know that gap down there, 423. We're not going to overlook that. Eventually, we're probably going to go down there and hit it. But I think that may come after one more good try to maybe take, at least on the hourly chart, maybe take a little stab at that 200-day moving average, right? That 438, 80, 90, whatever you want to say, depends on how you want to look at that. But if not, expect for it to roll back over here, right? Got to push below that, above that, and not roll back over. Right? Job numbers are expected tomorrow to be, jobless claim numbers are expected to be around what, I want to say 368 million. Excuse me, 368,000, excuse me, jobless claims, right? Jobless claims, meaning they're making, claims for unemployment. So they're saying, I think roughly around about 368,000. A slightly a little increase from what it was, I think, the previous one. Who knows? We'll see. So that's a mixed signal, but the one that we really want to pay attention to is the one for Friday, the non-farm payroll. How many jobs did we add? Because that's going to say whether or not, even more so, is there a need to go ahead and taper now, early, meaning go ahead and make it official that we're going to taper in November, because we're literally right at November doorstep, right? It's October, guys. This first week in October is out the way. So we're right on the cups and the steps of the November month coming through. And if they're going to make a first taper in that month of November, then guess what? Yeah, these job numbers need to kind of prove to be pretty decent. And also on top of that, we have also CPI data coming out too, which is going to be another, that CPI data going, if the inflation numbers are higher than it was from last month, woo, Gina, woo. Yeah, that could be problematic. because the feds can't have it both ways, can't have his cake and eat it too, right? So there's gonna be a need for them to really deal with that. And they're on the fire right now anyway, again, with all the insider trade. Like nobody looking at them as a reputable institution at this point. Like everybody's like, you guys are straight frauds, y'all running a Ponzi, y'all benefiting all taxpayers' money by trading the market, by setting policy and benefiting by buying these dated positions. These people just straight frauds. Like, whatever. All right, I'm gonna leave that alone. Right. I'll be here for days going in on them. All right. He said got those chart stock antibodies. You already know it, Oba. You already know it. Brother, everything. What's going on, family? All right. Yeah, man. Got to put that mask on, boy. Deal with these markets, boy. They trying to look, boy. People have y'all jacked up. All right. So that's what we're looking for, guys. So again, everything checked out to what we thought would be far as the whole Moderna thing. We talked about it last week. We benefited greatly off of it. Again, we just, oh man, gotta love it. That gap down was sweet off that news. Bought those puts up around that 340 area and Friday area. I mean, basically Friday into to this week, and whoo, look at there. Look at there. Look at there. Only thing I say, like I always regret is should have bought more. I should have bought more, right? All right, I only bought one. I bought one reel. Man, I'm kicking. Well, I had bought other stuff, but y'all know it be. I actually did that one for a case study, since we had talked about it. True story. But nonetheless, it's paying. I haven't closed it. I'm gonna close it probably tomorrow, right? Because I got a feeling they may try to get a little bounce, especially if we break lower between 280, 290 area. If they can get down inside the area, because they're gonna try to hard bounce this thing at some point, because the RSI is starting to bleed here, and that's on the hourly. It's sitting at 23 on the RSI. I'm pretty sure the daily gonna look like maybe 31-ish, maybe, give or take. I don't know. Let's see. Let me see if I'm good at what I do. I'm still good at what I do. Yep, there you go. RSI sitting right at 3080, right? 30.8, excuse me. So basically right at 30. So I was right about 31. Right. But yeah, so sitting right at about 30. So yeah, it's just starting to hit that oversold on the daily, which is this is one a lot of the algos watch. They like looking at daily charts to do a lot of their assessments, or fund managers or statisticians, whatever. They look at the daily charts first, and they plan a lot of their trades from the algorithm around the daily. And then throughout the intraday, they use they'll use the hourly, the 20 on down and down. But from here, that's why I plan for that low 300s or break of 300, right? Because that'll put the RSI on the daily right at 30, a little lower possibly. So for me, I have no qualms with covering the put that I bought literally the other day off this little this candle here into today, because I did not know the Sweden news was gonna come out. I did not plan for that. I was just planning for the rollover, the bounce. That news just added more gasoline to it, right? They pulled the vaccine in Sweden, right? Denmark, because of side effects. So hey, yeah, more fun for me, I guess, right? Sorry for the people, but hey, that's the name of the game on the investment side. So we go ahead and take that little $100 and turn that into like 500 plus, right? So definitely liking that. All right, so that's it. So that's it, guys. I don't got anything else at this point. For the most part, this was an impromptu live stream. I didn't plan for. I didn't really even get a chance to get a thumbnail up. None of that. I didn't even get no description in my description box. So y'all know that's unbecoming of me. I like to always provide content. I'll come back and fill in something maybe later, but I mean, I even open up all over the place, right? Screens up everywhere, sharing crazy stuff. Man, look, one of them days, bro. I was chasing that money, right? I mean, it wasn't one of them killer days, but anything more than $1 made than you had the day before, that's to me, that's a win. So I take the $1,100 and run with it. Could have been a little extra, here and there, given the position, how the way the spy bounced. I could have, could have walked with this a little bit more, but that's all right. No word, no harm, no foul. No harm, no foul, guys. So that's it, guys. I got nothing else, man. Unless y'all want to come on and lead the show, I'm gonna pull back and reclining my little chair in the office here. But if y'all want to come on the panel and share your charts and go over some information and build with the family, y'all can. Of course, you're welcome to. I always gonna, almost always gonna put that out there. I'm always gonna put that out there. But as far as me running my mouth, I'm gonna take me a breather, get me some sea moss and some coconut water because I need to get them some minerals and nutrients in my body. Right, look at that gap right there. Boy, that gap right there. Well, boy, all right, let them bounce tomorrow. And they don't have that significant news, right? Because keep in mind, just last thing, Moderna is just waiting on to get that booster shot approval. It's all but said they're going to get it. The European markets are already pretty much giving them the go ahead. But, America, is waiting on it, right, to be official. So until that happens or they close the gap down here at 260, then yeah, the markets are, playing that, plan for the next press release in terms of Moderna. But if that news comes that they get that, booster shot, approval from the FDA, that'll be, some short-term fuel for Moderna for a bounce. I don't know which one gonna come first, but definitely break it down inside the 300 down in the 290 area. Hey, that puts some pressure on the bulls. That's why they're trying to fight to hold that gun line at 300. They trying to fight to hold that line. But they're gonna be fighting all night tonight. What time is it? 6 foot? Yeah, they're gonna be fighting for the hold that line. All right. So yeah, anybody want to come on the panel and share their screen or maybe talk about the broader markets and share some knowledge with the family while I go on mute. If not, I'll just close the live stream. Then I open it. We'll do a new one obviously tomorrow, of course. But I don't have anything else to say at this point, personally. Not that I think that you guys probably already privy to the point where if you follow any news or to that nature, if you have specific stock, that's different. But there's nothing else, guys. I'm gonna go ahead and shut it down. Let's see. Brother, I always say you got a chart. Okay, hold up. Let me get the link. Then you got it. The floor will be yours. You got the whole mic too. I'm just gonna go on mute silent and cut my cam and let you gentlemen rock out. Hold up. Where's the invite thing at? Okay. The invite link. Close that. Close my right there. All right. So Brother Dollar Wheel in the building. Where we at? Let's see. Where is that video? Live stream. There we go. Okay. Yep. That's it. So that should be able to get you on right there. Anybody else that may want to come on. There's the but again, y'all can even close it out because like I said, I ain't got nothing else, I don't have anything else to add at this point. Matter of fact, I'm just gonna pull my scenario out the way here and let you all rock out. All right. Let the family rock out. Matter of fact, I don't even need these headphones on because at this point. Let me get me some sea moss and coconut water and some colloidal silver. All right, yeah, Brother Dollar Wheel right there. Matter of fact, let me just have it on enough that you can hear me. All right, Brother Dollar Wheel, you in the building? It's still coming through a little bit.
I gotta unmute. I'm working my way around Zoom. I haven't been on Zoom in a while.
Oh, it's okay. Take your time. Take your time,
Let's
family.
see. So I'm trying to start share screen.
To make sure all the things are set where you can do it.
You disabled the share screen, but yeah, you don't have to enable it. If you want to put up
no, it's set. You got it. I had to make sure I just set the settings where anybody can share it. Allow participants to share. So you have the right to do so. You have the right to annotate on charts. And I'm gonna make you the host if I think I can. I think I can. So you can rock out, until you kind of finish handling business. I'm gonna be listening from my tablet and my cell phone real quick. I just gotta go upstairs real quick.
I want to cancel the screen I'm looking at. Shit, I know I hit the share screen, I don't want to share for what I don't see what I'm looking for. I'm trying to eliminate it, get it off the screen. Go ahead.
No worries. No, let me see if I could. Yeah, I'm gonna make you the host too. So let me make you the host so that way you have straight administrator override. That means you can share. You won't have any issue. That means if anybody want to come on the panel, you'll have the ability to let them come on to the panel too. You just have to admit them.
I'm not. Yeah, I just got this one thing, and then we're gonna be out of here.
That's fine. I'm still gonna make it a host because you just as much as the boss. You just as much as the boss in this. So
you know what? I see it. Thank you.
But I'm just saying, because that way, if I go upstairs and you have an issue, like you get kicked out or something, you won't have to worry about letting yourself back in or even share your chart. Because sometimes with the way Zoom set up, it has a lot of administrative override. You have to be the admin to be able to do a lot of that stuff, because it's a business, share site. So you being the host, that means
Zoom is the real deal.
Yeah, they make it strictly for leverage.
Yeah, I'm gonna set my game up. You can do like pay-per-view. When I saw Sunday and Dagger Squad over there doing that, I'm like, oh man, that's when you really about that capitalism.
Well, again, it has its place, because in terms of what we do, it works for us. The same way we took over Discord. Man, we took over Discord. Because Discord, you be strictly gaming. Now it's flooded with day traders and Bitcoiners and. So, now Zoom is the best thing for us in terms of what we do because, we can reach a lot of people and really get descriptive, in doing what we do in our technical analysis. Basically doing like an executive boardroom people would do. Here's our charts, our bar graph, here's our information. So, yeah. So you got it over. You the host. If anybody want to come on, you just got to make sure you add them. You'll see the little thing pop up, a little blue. Just make you click on it and they'll come right on. And so then I post a link just in case anybody else maybe on the.
I'm trying to see I hit the share. I don't see it though. I guess
it should you should be able to see it because you definitely got admin. You got the privilege. So you the admin or the host, I should say. I keep the admin, but you're the host.
Sorry, I'm not getting this right. We probably gonna have to bail, but I don't want to hold this up. I'm not seeing. I hit
right there.
I selected. Okay, y'all see it?
See right there, it says button. See right here. Hold up, let me make sure.
I see. Well, I click where it says share screen, and then I selected the screen I want to share, but I don't see it. I don't see the screen.
So down when you hit the button with whatever screen you're trying to share. Make sure you go down to the far right hand corner. You see that little button that says share. You make sure you got to click that too.
Yeah, I did that. The blue button.
You did that. Yeah. All right. So you got to make sure you click on it because you just clicking the screen alone won't do it. So if you click that,
let me make sure again.
Yeah, that should make it strictly be able to share. Yeah, that'll put you. See, there it is. Look at that. Okay. Look at that.
All right.
And you can change the course.
This gonna be real short. Only reason why, because you did a long stream and you dropped some good information. I just wanted to, because we brought this up the last time. I just wanted to take this time to make sure that we just covered all the stuff.
No worries. Yeah, I actually played that little bounce off of it too. Maybe about 100 plus, it was about $80 off that bounce, that previous bounce into that news that they had, and then I closed it out. I'm gonna wait for it to go back down and play it again. But yeah, CGC
right. We had a key point in terms of whether this is really a prospect or whether it's something we need to, maybe walk away from. Like this is the low from back in March of 2020, where a lot of stuff started. And, of course, we retesting that area. And what I highlighted here was where basically where it kind of broke out, from that point, because we're near that area now. And we see, of course, the sequence of lower highs and, lower lows. So, just to keep this thing real elementary, it's got to break that sequence. As long as that sequence is intact, it's going down, So it looked like it was trying to do something here, but then it continued and made a lower low. And I'm just looking at this inside of this is like an Elliott wave structure. This would be like a wave 4 where you would retest this broken support and then continue down one more Fibonacci distance of space from here to the bottom, which puts us right in that critical area that I'd already outlined from way back here. So if it that would be encouraging if it found support right in that area of interest and then broke this trend line and made a higher high. So that's where we are on this, just to get everybody back kind of updated to, we're in watch mode on this, but we're not far from a critical area. But if we go lower and make let's see, if we break of course, if the dam bursts and we break this low, I'm out of it. I'm walking away from the whole marijuana space.
Well, you know what? I would say this here, just in fairness to knowing how markets are, man. Just me. If we break that area there, I'll be looking for the next support. I will begin to slowly starting to load me some leap calls at that point. Why? Because CGC hadn't been down there in prices since IPO. And keep in mind, the cheaper it goes, you gotta look. Well, I'm just saying that because the fundamentalist in me gonna let me know instantly. Let me know that CGC is basically owned. Well, 40% is owned by a Constellation brand, right? They got about $4 billion inside the CGC. If it gets to that point, I have no doubt in my mind that Constellation brand either gonna do one or two things: add more money to the pot for CGC, or they just gonna go ahead and buy them outright, because at this point it's gonna be too cheap for them not to want to own it outright. They only got 40. They own 40% of it now. Who's to say that they ain't pushing to get 60%, because they know that's a funnel to get them into the alcoholic beverage lane. That's what they there for. That's why they made that deal with them. And Constellation brand ain't no slouch business model, right? They the company that own Corona beer. They own Modelo, right? So this ain't no small little beer manufacturer. This is a big dog, right? But they want to have a supply chain, or a value to get into that marijuana, that drinking space, right? Because that's the next wave. If people already starting to do it, everybody now just waiting on the legalese to catch up, right? We know that they're going to eventually make it legal. It's obvious at this point. They're going to remove from a Schedule 1 drug. Be it a year from now, 2 years, 3 years, doesn't matter. That's enough time I'm willing to wait, because I tell myself every day, if this thing come down to that $10, $11 point, if it breaks the floodgate and come down to that 9, yeah, I'm here, like right on your chart right here. Let it come down there. I'll be low leak calls down there. Right there, I'll be buying leak calls like crazy. Why? Because my risk profile puts me basically at the bottom.
Yeah.
You see what I'm saying? I'll be willing to risk that for a longer uptrend back, I put up 37, but anywhere back up toward $15-$20. I'll sit on that for 2-3 years, right? Because those contracts, I guarantee, if I go to bar chart right now, them 2023 contracts for CGC, let's say even at the $15 strike price, ain't gonna be no more about $200-$300. You mean tell we ain't got $200-$300 to sit on 3 years for a particular marijuana, approval from a Schedule 1 drill, and at that point they start to bottom out, because at that point a lot of those medicinal companies, they already starting to move around, but that's going to give them more of a favorable traction. You feel me there a little bit?
Yeah,
right?
yeah.
So I'm with you. Matter of fact, I played that bounce. I played that bounce. That last bounce, like I said, made about $80 off of it. It just did an over under whatever, but and then it came.
But what's kind of spooking me from I'll say from an LA Way perspective, we see counter trend moves to make an ABC move. Now, the confusing part is the fractal nature of the way things move. Now, I see this as the ABC. Now, it could be worse. This all could be an A. This could be a B. And so if it goes below here, it opens the door to debate that this could be a C, one giant A, B, C that could really get nasty. And so
I'm like, again, if it does that,
so I'm one.
If you get a C
have
right
a
here,
trend line on this, bro, and until it breaks this big resistance trend line, I ain't messing with it.
Right. Here's the deal. If you get that C down there, if that is the case, if they make that the C pattern that does that $8-9, well, it's showing 9. It's saying $9 at this point there, right? That's obvious support right there. Let them do that. I guarantee you that D move is gonna send it at least back up near 20.
Oh, well, in terms of just speaking for LA Way theory, if when this move completes, all this is under check. We're going north of this because this low here, L, and so we're talking about, we over $100, before we get to the next serious, around $90 or $100 before we get to the next serious resistance. So this is HODL. you hollering, you getting all of
Yeah,
that.
yeah. Anywhere, like I said, anywhere in that 9-11. Like I said, I'm more. I kind of went over it too the same way because I end up playing the bounce, a call bounce in it. Make the little $80. And I say, you know what? Yeah, if we, we come back down, Pop's going to try to test that, that 12 area, and that's going to be in lieu of the broader market. See, the broader market right now dictating a lot of these companies from being able to really, solidify supports because they they have to, again, under the big dog, unless they just standing out strong and they can just buck the overall broader market trend. But the SP 500 right now got everybody in its clutches, right?
Yeah,
and
but what I do like about this monthly chart is we were oversold here. This is a monthly chart. We're deeply oversold here. We're deeply oversold again. We're down to fives, around 5.
What are you using here? I see you got your oscillators down. What are you using your oscillators down?
This is a stochastic right here.
That's the stochastic. I often say that one. What's the bottom one? Is that the
and this is the MACD touring
around
you
got
the
the color
line.
change.
Yeah.
You just got your color change.
And so the fact that the MACD is, finding some strength around the center line, that too is encouraging. We on a significant time frame, like a monthly. So I can see an argument for optimism. So my plan A is that this thing should hold. But this area that we pointed here should hold.
You can tell they're slowing it up there too. They're hitting the brakes.
I'm gonna run like hell, boy. It don't hold, but I can see a good argument why it should hold. But hey, I got my exit, my line in the sand, of when I'm gonna walk away from this thing.
Gotcha. Makes sense. Got sense.
Yeah. So that's what I do. Where I offer counter arguments to my own.
Well, you're supposed to. You're supposed to have both sides of the argument scenario, because that's only you can have a more lucid picture of a technical analysis. Because again, that's what markets are. I tell people markets is like code. It's an and or and if, right? That's code all day, right? That's how you do coding, right? Because you got to place the variables and the possibilities, right? The plausibility of things. And markets are no more than just that, right? You in this case, it's investor sentiment, right? And on top of that, it's also based on whatever the underlying the basics, right? The basics, meaning the fundamentals and when the technicals marry in that perspective. So if there's stuff not there that can move it, then guess what? It's gonna bounce. That bounce that it just did recently, ran back up to that trend line. That was all based on that news coming off the marijuana news, right? As far as the banking piece of it. And I just played it for that banking news and made a little couple dollars off of it. It wasn't luck, but it was something. Then it ran back down because the broader market failed, the SPY failed. But yeah, I
like this divergence on the MACD. We got, this is the 4 hour. I jumped down to the 4 hour now. So we got ascending momentum with the price still coming down. So we're getting a little clue that there could be some accumulation going on right here, because the momentum is coming up while the price is going down. So that divergence is a clue. It's like one. So I can see some arguments in the technical side that suggest that we got some strength. And I like this. You usually, this is a common one to find early, is that the momentum starts to rise before the price, because eventually price will follow momentum. But they don't move in lockstep. But, so I like that too. I like that side.
Right. And let's tighten it down for what it were. We know what it's like when we started seeing this here. When you start seeing stuff like that right there, that means they're trying to pump the brakes on it. They're trying to slow the bleeding. Because that means they're trying to plan, they're trying to establish support. We'll just say that, right? But ultimately, the overall bigger picture of the chart here, I mean, it's screaming falling wedge, clearly. And if the wedge going to be at the 168, it's going to be at 161 there, or if it's going to be down to the $9, either way you look at it, that's a cushion around about $4, right? From 13 to 9 at the worst case scenario, or 13 to down about 11, 9 to 12. That's going to be about another point, right? Before you can have any kind of significant potential, right? Of slowing of the of the bleeding and starting to kind of get that curl, right? Try to build your curl energy, then maybe go back and test some of those areas. So look, I like it anyway down. So I'm waiting for the next wave, like you said. I'm waiting for that $12 region to kind of get inside $12 region, and then from there, I'll be looking at some short-term leaps. I may buy the 2022s at that point. Now, if we break below that, like you said, and get down to that 9, I'll be buying 2023s, right? Because I just be sitting on, I just throw $300-400 on it or 500 and just sit on it for like for 2 years. No problem with that. I have no problem. I would do that.
And another encouraging sign I'll be looking for is we see right here, we have the support here where the price gave way. That's also where the MACD went below the center line, and stayed there. So
Right.
if this divergence continues to move up, I'm expecting this. What would be a bullish sign for me is if the price finds support right in this area with that we have outlined, and this MACD ends up sitting right here at the center line.
At that line.
Because the next bullish move is when this MACD goes above the center line. That's when you get the spike. So the fact that, in fact, I can connect this low. This low is higher. So, so we've been having rising momentum for a while, but we're still below the critical center line. So I just have to see this as a, possible clue, but it's not actionable.
Makes sense. No, but it makes sense.
This line,
but and one thing we train a lot on too, because I did when you start having again, markets are always trying to dictate what, potential change of direction at some point when there's been substantial bleeding. And a lot of this is what they call the volume is starting to dissipate, right? But the stock ain't really just falling. See what I'm saying? It's slowly. That means they slamming the brakes on. That means the incremental buy is more people buying than people just actually trying to sell it. The people that's already short selling, they already in at this point, right? They just trying to see if they can squeeze out any extra little turn. They ain't going all in at this point here, not thinking that, okay, this thing might could turn and bounce, because they still honor that falling wedge. They know falling wedge is the bullish, bullish pattern. They ain't stupid. Right.
Yeah, we got algorithms out here, even if they don't know. We got trading bots that'll do it for them.
Right, that'll do it. Right, initiate it. So yeah, but you got it mapped correctly. You got it mapped all the way right. I mean, this is the area of our contention there. Down to that a little bit under that $12 range, about $11.90. That would be critical, right? But if you bounce there or you hold there, boy, yeah, you can get some nice little momentum off that, and maybe go out there and try to test that 15 break above that. You can definitely go try to take those guys out, send over here at 17, but that's going to be dependent on.
I'm gonna do what you said. I'm a hodl long term for the retirement.
I'm buying leaps. Yeah, I'm definitely buying
retirement account. And I'm going after that break above this high up here. Was it $57 or whatever? I'm going after
the only way
that.
we go back and get that again. What's in lieu of that happening, right? I'm sure you already know. We got to get that that approval, right? That's the only thing everybody waiting on. We wait on that approval. That approval, man, that'll send that thing. Woo, boy, it'd be like Tilray when Tilray did make that big massive run. Right, bro. But CGC obviously more solid than any of them companies anyway, because they got Constellation brand. But like I say, but see, either way, I'm even looking at twofold. If we get it, we get the law, or we get the what? The buyout. It's simple as that. You gotta look at it for what it is. The valuation is too attractive for Constellation brands not to own more than 40% of the company. It's gonna come back down to $9 support. And in the world, they're gonna not want to own that company at that point. So they're gonna say, "What y'all got to lose?"
Another catalyst. I think it could work even if the law doesn't, happen like time. Tell you what, I'm looking at back to the S&P, just the chart, just like when I was calling for that a shallow pullback, which it seems like that's what we got is a shallow pullback. That's the good news. So the good news is that we got one. I believe we got to thrust higher. And then we're going to have a major correction. We would call that wave 4, and that wave turns. Now, because we can likely end up overbought in a lot of the technicals, the NASDAQ and technicals in that sense, tech stocks, that money will see this as a bargain price and pour into tobacco, alcohol, and beverage, and other and some staples, consumer staple stocks, just because it's already it's been beaten to hell already, and the downside price action is low. The chance of it going much lower is low, so it would be attractive as a place for money to rotate, and that could cause it to go up, even if the law doesn't pass in time.
Right. Again,
just as a value proposition alone.
Right. Given the fact it got something to play with, right? And like I say, just keep y'all, of course, y'all, for those who might be familiar with the XLY, it's staples. Yeah. no, is it P? And XLP is consumer staples. XLY is consumer discretionary. So consumer staples, obviously, within that perspective, that's that discretionary thing. Beer, alcohol, because also still fall in some of the in some of the retail stuff too. But definitely want to check that consumer staple level. Like he's right with that. Just kind of keep your eye on that chart for the most part as well, as a backstop to that ideal too. So yeah, looks good. Like I say, down anywhere near that area there, then you got to worry about me because I already got some lines on the sand. Yeah, drone down there too. And I got my leaps already, what they say already, and they be saying in Texas already. I got some leaps already waiting, so basically a limit orders for contracts, waiting for those to get filled potentially. And so just coach, I'm sure you check it like I do, but you run over the bar chart, it definitely keep you in perspective.
Oh
right?
yeah, that's my favorite site.
I know that's your favorite site too, like mine. So that gives you that insight. Okay, what are people piling up at? What they looking at, man? What are people looking at?
I tell you, bar charts are so good, it'll make you lazy.
It will.
I
man.
I
really
haven't done a custom screen in years. I don't screen for things. They already got all the pre-screens they have is the screens that I normally would do.
Yeah. Even if the paid version, it just add more ice to the cake. But if you, I mean, the regular version itself is just so awesome in itself too. It's like, man, but she don't need nothing else. If you already seasoned, you don't need nothing else. I agree with you. So yeah, you're 100% right in exact. Again, like you say, just discussing it from that perspective, marijuana space is definitely, it's due. But again, we know what it's subjected to at the same breath. So of course, you don't have to even be premature in this space because it's only dictated by a couple factors at this point. No matter what they do individually doing their earnings here and there, it's still got to deal with the broader, market, perspective. But those things are getting a track. So I guarantee, like the same way you see a CGC chart looking like this, tier rate chart gonna be looking somewhat like it too.
That's right.
Same
And
with,
MJ, the ETF.
MJ the same way. Hexo, all the Neptune, all the ones on the marijuana, IGC, OGI, all of them will be kind of showing that same kind of. You're gonna have one or two outliers that may be trying to pop because they might just drop some news. But outside that, all of them gonna be looking the same.
I like to go into MJ and then use and look at the break it open and see what marijuana or cannabis stocks they actually are buying. And then I pick the one in there that's really got the steam. So that's because that's gonna be the one that's really driving the gain of it. But that's if you really want to hit the home run, that you can go look inside of it and see which one has got the biggest move to revert to the mean or retest that former high. Because if that space is projected to go higher, then I like buying the one that has fallen the most. Provided that it's moving in sync with the market cap leaders. I consider like CGC like the index. Because there's so much money in CGC.
is definitely it is their breadwinner, individual holding scenario. Because again, it's so much of it's not even so much of the in and out performance value of it. It's the idea that it has the pocketbook behind it. They think about that Constellation brand. They think about that $4 billion. Right,
and it's got the most institutional support.
That's what I'm saying. We're headed toward that
over more than the other.
Yeah, more people more comfortable with it because of the fact that they know that there's a bigger purse sitting in there from institution. And like I said, you got that one player in Constellation brand. People like, okay, they know what's up. They're like, man, these people going to end up buying them out. It's almost but given at this point that they're going to try to even do 100% split merger or they're going to buy them out. Right now, they're sitting at 40% ownership. That's so only 10% more to get 50%. So you already know that ain't far-fetched.
So if I see another marijuana cannabis stock that doesn't move up and down with CGC, or it could be anything we're talking about. If it doesn't move like the market cap leader, if it's not following along, I don't trust it.
Right.
I like the ones that follow the leader.
Well, that's it. Like I say, it's it is playing the role of the sheriff, regardless of what people may be looking at for the share price, and that's fine because the rest of them downtrodden too. But until again those things that we talked about, factors kind of moving into play, all you do is sit and be patient because there ain't no rush at this point in the marijuana space. People who got money that still banking on the marijuana space that, you know, took advantage of the first little craze of it, they just sitting there waiting for the right, you know, for the getting it, you know, to get good again. And then they're going to go all in, right? And it's not going to be hard to realize that you're basically at the most optimum risk, less risk profile that you can possibly get. You either bouncing at 11 or you're going to bounce at 9. Either way, it ain't too much more to the bottom. Downside, I'd rather play that much risk than trying to play it from way up here, right?
Right.
Yeah, that, you know, ABC, you know, 1, 2, 3 kind of scenario there. So yeah, I like it.
Like I said, how it's
see.
I like how it's respected this price area, traded right up to this prior this failed support, and it's like looking like we're gonna go get that level we were talking about. But yeah, that's what I'm looking at, fam. You know, I just want to
make that money right there.
Since we talked about it before, I just wanted to, you know, let people know we ain't forgot about it. We brought it up. You know, I thought it was gonna keep going, man. But hey, that's what trading is. That's technical analysis.
That's what it is. But we talked about
direction. You change. You got to
change with it.
The flow.
We talked about it. It was like, you know what? It's still gonna be in lieu of what? The broader market. It caught its bounce on that banking news. After that, the broader market with the SP 500, it rolled over. So you know it took everything with it. It was a fire sale. Yeah, they had to get down and lay down because the big dog spoke, and it turns out the SP 500 it just brought everything else around with it. Had that not happened on the SP 500, we probably would have broke that trend line. I had no doubt we was gonna break that trend line and maybe try to test, 16, maybe, try to test it. But yeah, whatever. We get it. Like I say, that's why I love this stuff. Yeah. Oh yeah. So awesome, man. Great breakdown, man. So I love it, man. So yeah. So you guys got it, man. If you got anything else, man, the floor is yours. If not, we'll close it because
I'm done, man. Learning. You dropped some good game today. I think I'm ready to step away from these charts for the day.
You didn't did us even a better service on the back end. So that's what it's all about. So like we've been saying, guys, just the market as a whole, it's so many different layers to this stuff. And there's so many different spaces. So you gotta, again, it's about conditioning yourself, right? Once you've been around this stuff long enough, you know how to move around the different spaces, you know how to stay, again, fluid in terms of, what sectors are, getting ready to get into their rotation or not. But it's great because again, you always have something on the table that you can work with, right? You always got something out there, no matter what other people might be saying. They stoked, they can't see nothing. And man, look, I always tell people every day that market open up, somebody finna make some money, right? Somebody gonna make some money regardless. So you got to get in the habit of figuring out how to find those moments too. And if it's just too bad, of course, the best thing you can do is sit in your hand because that's the best trade now. Take sometimes one that you don't take. You don't have to rush it, right? But for the most part, it's gonna be a bag out there waiting on you if you're willing to kind of go out there and abide by the rules. Be disciplined. Obviously, have your due diligence on point. Then you can get a bag. Right. So we loving that SP 500 is giving us a lot of play right now too, because the expansion of it's all over the place. If you play the pivots right, you can get you some nice bags for less price. Right. So, it's money out there to be made. So we're going to stay humble. We're going to stay hungry and we're going to stay focused. Right. So shout out Dollar Wheel. Go subscribe to the YouTube channel, guys. I'm pretty sure most everybody in the chat at this point now already about to subscribe to you, but I'm going to say it anyway. Again, just in case we get some new people coming in straggling. Go subscribe to Brother Dollar Wheel's YouTube channel. You see his name in this in the back chat, Dollar Wheel. Just click on it or just type it in the search bar up there, YouTube. Go subscribe to that brother channel because he put in work like a lot of you guys, like in terms of what we do over here. And like we always say, we work over here. This is a working channel. We don't just come on and, window dress and talk. We actually put together some, some sound conversations that you can now, apply maybe inside your repertoire, your skill set that you could build from. And to me, that's what it's all about. That's what we come on here for, right? We come on here strictly to work, right? So shout out to Dollar Wheel, guys. I wish I had a digital, I'm getting a soundboard. I get some sound effects coming soon, so y'all bear with me. I just got upgraded some of the stuff, but I'm coming, right? So we can definitely big up the family. Yeah, so anytime over. Thank you, Dollar Wheel. Everybody in the back chat for coming through today. We appreciate you guys. It was an impromptu live stream. This was one of the ones I just really threw together quick. I didn't even have nothing in the description. So Thank y'all for being patient with me for that. And we'll get this thing popping again here soon. Maybe, if things work out tomorrow, we can run a little special tomorrow, because I think tomorrow gonna be weird for the fact that, we're coming up to another major data point in terms of the non-farm payroll. The job claims numbers come out tomorrow in the morning, so y'all know that's gonna be a big one. And whatever, right? So I think, you said Brother Matt said the market is up now after hours. He says up $1. Spires up over $1 after hours. It may break 436. What's up? Well, the futures open up at 6. So if it's running because of the futures is pumping, or somebody might. Yeah, you're right. They ain't show here. God, oh, you're right, bro.
We got to take out that critical high in order to end the week on a positive, a bullish sentiment. But if that doesn't happen, then I'm not going to be sure about my call, because in the uptrending markets, typically prices in FOMO sets in. Okay, so nobody wants to be
people
left
chasing
out, and so they chase it and drive it up, make a strong positive move on a Friday. But in bearish and sentiment, people are afraid to have their money in over the weekend, and that's when you get those down Fridays. But don't take my word for it, y'all. Go to the daily chart and kind of circle all the Fridays and see if you don't see that play out, that in uptrends, the week, if it's going to have a pullback, if that pullback is going to happen in the beginning of the week, and then it's going to be bullish towards the end of the week. But in downtrending markets, it's the opposite. So it'll be bullish in the beginning of the week, but then the bearish sentiment will return towards the end of the week. So just see if y'all notice that. That's the thing I love about the technical, because you don't have to take anybody's word for it. You can just go to the charts and see if it holds water.
Right, back testing. That's why I love this stuff. Cause I tell people, really, man, we got the best professional on the planet. Why? Because see, over here, this is performance based. People can't talk a good one over here. You got to be able to show and prove.
Right.
It's gonna run a lot of juggles off this campus real quick. Like, bro, you ain't cut from this class. Move on, bro. You can't gain nobody over here, because you got to be able to show up and prove. Of course, if you in it day to day, long term investing, obviously still rules the roots, because we're thinking long term wealth generation. But in the same breath, we can also do some stop and go traffic driving, as well, and that shows the intent of our ability to analyze very well information, charting, fundamental, whatever. We put those skills to test, right? Same way a person goes.
Long-term investors got to eat every day too.
Yeah, that's the name of the game, because that's what we preach over here, right? It's a marathon, not a sprint, because we're playing catch up. Of course, we know that. I ain't got to tell you that, but we're playing catch up, as a people. So we got to start thinking longer term now, being able to put some money away and let it grow and appreciate the assets, and stop trying to play this old coffee can under the mattress, being selfish, going to the grave with not really passing on no bag for these kids to fight with. Those days over with, right? You got some stock, some bonds, some CDs, whatever that can have some appreciation to it. That's what we all here for. Because in learning how to be good at day trading, it forces you to also put money away into some of the long-term investment, because you didn't trade them. You know how they act. Now you know how they act. You say, okay, I trust this stock. I see where it came from. I'm gonna start my little starter position here, right? I nurtured along the way. I DCA dollar cost averaging on it when necessary, but I'm just gonna let it keep fluctuating, right? Doing this thing. And you start another one over here. You start another one here. Before you know it, you got a nice little portfolio. And but you still day trading too. Your day trade profits obviously fuel your your long-term investments. That's exactly what I do. I'm so big on reinvesting my profits. It's just ridiculous, because I feel like I'm still playing catch up, right? So in a little bit I get, I'm putting it right back into the market. Rarely do I take some. I take some out every now and then and do a little stuff, but necessary stuff, of course. But outside that, I'm reinvesting all that stuff right back in the market. That's why people who made it, or they went from hundreds to thousands to 100,000 to million, that's how they got there. They did it through the reinvestment program, right? Flipping that money, turning it over, and then again, every now and then you get a black swan event. That's how you really catch a big bag, right? That's how a lot of people became millionaires. Black swan event, they short the market at the top, it dropped substantially fast overnight. Just wake up next day, they got 6-7 figures in their bank account. Like, how that happen? Yeah, that's the market. Get excited, right? So yeah, I live for this. I love it, man, and I hope everybody take the same passion. Not that they have to, but at least they want to learn to get better at it, right? Because again, it costs you nothing. It really doesn't. Just study. It's just hanging out, and environments like what we got here, and just doing your own individual study, in groups and Discord rooms, and just, really, reiterating your financial literacy or your love for becoming better at learning how to manage money, right? You're just doing it through the value of investing here, which is even really great, because now you get a chance to canvas a whole other industry or a whole different platform that you never thought, meaning you get to learn all these different e-commerce aspects of life, right? From tangible products to a service in itself. You learn the world literally from your desktop. Average person have no clue. They just waiting to consume and waiting to buy it. You know everything about it before they even hit their hand, right? And you can school them on it.
Man. I love freedom.
That's it. Yeah.
This is freedom.
This is freedom all day, every day.
That can free you. It doesn't matter, what you look like, what your gender, race, none of that stuff.
Fact.
None of that. Whether you minority, whatever,
my spiel. Race, color, creed, sex, gender orientation, midget, humpback, broke,
right.
felony, no felony, baby mother, no baby mother, good credit, no credit.
That's it.
None of that stuff matters over here. And
None
you can outperform a person that got a PhD, a ED, a BAS, a BS. Look, all that stuff is good and all, but look, your bank can run circles around, theirs. I just leave it at that, right? And it's legal.
There you go, even better. Yeah.
All right, it's 1,000% legal. Ain't nobody, and they can't never bar you from it. Boy, that right there got it. Boy, look at
just pay your tax.
That's all you gotta do. Keep pay your little tax. And then with coconut with a straw in it and chilling with that point on. So that's awesome, man. Thank you, Dollar Wills. Yeah, you right over Brother Mathis. You right. That thing is running after hours. You ain't all right, boy. They definitely pumping it.
Hey,
so I don't know.
We had everybody on game, so
we ready.
We not surprised by it.
No, we not. I'm not. I definitely took the swing calls for a reason.
Right.
That's exactly what I did. I said, let me buy me 2 of them, because I saw that price. They ain't finna leave without me. Let me throw me two of them in the kitty just in case, right?
So it looks okay. So we can have a positive open tomorrow, and then probably a pullback. And have a little, customary retrace through Thursday, and then finish Friday on a bang. So you have to have that sentiment go positive.
That's based on that non-farm payroll, because again, the only sentiment that Wall Street's trying to play, they're trying to front run the taper talk. Again, if the numbers are good tomorrow, then especially they're good for Friday. Now, tomorrow we just got to get through that gauntlet of, if there's any kind of, what they call monkey wrench, crowbar been thrown into the mix by the Republicans, right? This whole debt ceiling. Even though we know they postponed the talks as of tonight, but the Democrats are not going to stop trying. They're going to keep trying. Now, either they can agitate it, or they can just kind of try to push the envelope. Either way, we're prepared for it. I always tell people that's why it's easy to swing at the end of the day, as opposed to trying to do it midday in some cases, because again, at that point, most all the press that needs to come out, it have came out. And you safe at least on an option trade from at least 4 o'clock to 9:30. You just got to get through after hours and then pre-market, right? In case anything crazy happens pre-market. But you're still safer than the intraday volatility, right? When people come in and mess the trade up, right? These day traders that don't know what they're doing. All right. So that's just an old school strategy that I use a lot. And all the people that know what's up, they know how to use it too. We've been training on that a lot. So some of you guys already know I've been telling y'all about that. I always try to wait till that last 5 minutes of the market before it closed. And if the sentiment strong in any value directions, if I know there's still a lot of volatility there, I take my position right there. That way I lessen my risk profile, right? And then I just leave the market, kind of iron out its own little differences, fundamentally, of course, before the market opens up 9:30 for the next day. Either way, I can still get out either with a profit, or if they just zap me overnight because some one-off event happened, then that's fine. I take that L. But I already kind of assess my risk, right? Right. So that's awesome. So thank you, Brother Dollar Will. So maybe hopefully tomorrow, if I ain't too caught up tomorrow, I'll get a chance to go live. Definitely, if you're around, if you ain't busy, you're welcome to.
I got you
rock
on
out with us,
man.
and share with us and deal with us, and teach us as well. So same way, Brother Brother will be coming through. You're welcome to come on the panel and break it down. You got some love and knowledge to share as well. So don't hesitate, man. Don't be timid. Jump on in and go and build with the family. Right. So that's it. So I get out of here, guys. Get out you guys' hair. Thank y'all for coming through, everybody. Sister Angie, again, Brother Mathis, Brother Iowa, Brother Everything is Everything. Over Chris obviously came through, Brother Brandon, Brother Rich, Oba Marquise, everybody, you know, I might have missed a few people here and there, of course. Our brother Ramirez came through, Ramirez Heaven came through today. Our brother Pharaoh came through today as well. Who else? Brother American African, and everybody else that might have didn't get a chance to talk. But the